Sorry guys, I didn't realize my mic was on. Good morning. It's August 11th. We're going to be streaming stocks, options, futures trading today. Looking at some technical analysis, watching the SPY. GNS we've got up here. WeWork, Barbecue, GME. Dish, RAD. Is like my title. We dish, RAD, barbecue. Yes, we do. Happy Friday to you guys. Thank you for your support. Hope you had a good rest of your day. Yesterday, good little pre-market warm up. Make sure you're well hydrated. I am doing that right now. And You're well thumbs up. Got 5 on the day. So far, about 5 minutes to open. Yeah, WeWork's back up. Kind of sold off in today there. Bounced back up a little bit. GNS continuing its rally. I've wanted to add, but there really hasn't been any opportunity. And just climbing on bull flags, which, yeah, I don't know. Guess I'll just be content with what I got for now. I watched Orange County last night. That is neat. Just because of that, I was like, oh, we gotta watch that. It's been a long time since I've seen that movie. Not as good as I was hyping it yesterday, but it was kind of early, kind of not a first of its kind, but almost like a first of its kind. It was almost like when Old School came out, how that was kind of a first of its kind. Old School is even more so that way, but Orange County was pretty good. I mean, Jack Black's great in it. Yeah, so Orange County came out in 2002. Old School came out in 2003. So I think Orange County did kind of start that kind of college. I mean, I guess we've got like Animal House, but I don't know. I think Orange County kind of set that off a bit. Don't get your hopes up. I mean, it's what, it's like 20 years old? Holy smokes, that's crazy. It's much more wholesome than Old School and Animal House. That's nice. It's not quite as funny as though. The main actor I'm not a huge fan of, but and Jack Black's funny in it. A couple other characters you recognize. Nice little throwback. Anyways, yeah, that line I think is my favorite line in the movie though. Buys coming down here. We had PCE. PCE? Is that what it is? PPI. PPOP. PPOP in the morning at 8:30. I guess the market didn't like it because it's down a little bit. There we go. Continuing this trend. Actually, today we're kind of breaking out of it, I think. The downside. So that would be kind of interesting. Maybe not yet. We're like right on the support line there. So yeah, we'll see. We get kind of a bounce and then intraday kind of head and shoulders, head back down. Could be in for some fleshy flush next few trading days, next week. Gap fills, 443 and maybe 431 even. I'd see a couple big moves here if we do break this that we've been in. But yeah, appreciate your supports, guys. Market's about to open. Got a couple minutes. Good morning, Molava. You are first again. Well done, sir. Good morning, Bubblicious. About 442 puts today. Nice. It's coming down more. GNS, nice little gap up. WeWork, gap up. Picked up some shares of different things yesterday. Man, I'd like to see RAD bounce. That's not nice. Dish is down 1. I got KBNT down 3% pre-market. And I got some little liquor down 15% pre-market. I kind of thought this might be a scale in on liquor. This isn't uncommon for IPO to actually sell off first few days, and the hype kind of dies down and then finds buyers. Hopefully this one finds buyers. Doesn't just keep selling off. I haven't seen anything. I haven't checked Reddit or anything. I don't know if that news is spread about this company and Ryan Cohen. Kind of interesting what they do. I'm not even... They are a marketing company specifically for alcohol companies. That's what they're saying. There's the market. We've got GME down 1%. GNS is up 9 on the open. Typed in AMRS in Discord last night. I think just because it was gapping pre-market. So I'm not sure what's going on with this. Or why it's on my watch list. Huge gaps down. Proterra. Yeah, I saw that article. The CEO or the owner or something sold a bunch and then they filed Chapter 11. B is up 16. GNS up 11. Got Smile Direct up. BRCC. Wait. Eyes coming down. Joan! Like Joan. Morning Guts. Morning Anthony. Potentially gap fill and then come down. We'll see. Just a flush out of the open. I don't know what I need to be looking at here. Here's on Teladoc. I want to see this thing bounce today. Charge points down 1.6. Buy is flushing. Down 0.5, 0.5% down. Okay. Excuse me. Okay, and then let's see. Yes, we have PPI this morning. At 10, we have consumer sentiment. Not usually a huge market mover. Base. %11 on GNS there. Dish is down 0.8 and RAD's down 1.4 at that $2 level. So since retail owns such a big amount of RAD, it's probably not a very good thing. I'm trying to be very slow, very patient today with SPY. I'm up good on the week. Might even, yeah, I mean, I'll probably end up taking a trade, but I'll be happy if I don't even be happy with that. We just ripped out of open. 44%. Crazy. Got SDC's up, Groupon's up. We is volatile. Excuse me. Runs up a little bit. Run had a pretty big sell-off yesterday, actually. That's engulfing. Not the best. That's down 1.5. I think I might cut my calls on this thing if it doesn't hold today. Seems silly I didn't cut them sooner, but I mean I don't know. Maybe I'll hold them. I've got a lot of time. I'll just hold them. September's I could have waited to get back into, I guess. That engulfing candle on the daily. Yesterday would have been the day to cut. On the break of that bull flag. Right here. Remember when I said it breaks this? I'm gonna do something. I think I wanted it to hold that. It didn't. And then that was it. Thing is though, September's I'm down on now, so. %10 on GNS. Those are halted? Here's halted. Down? Oh. Not good. It is a tiny float actually. Only 1 million. It's halted down. That sucks. If half of the apes get wind of this thing with 1 million float, are you kidding me? That would be crazy. I don't know if it's halted down or up. Let's see, 26, 29.60. I think down. I want to see a bounce on charge point and Teladoc. I don't know. We're expecting something for AMC today. Runs catching a little bit there. It's up 0.7. GNS up 9. Or what? Groupon's up 7.5. Wow. It hasn't come down yet. BRCC get some news. Oh, they had earnings? No, they didn't have earnings. Oh, yeah, they did. Wait, no. Yeah, they did. Oh. Whoa, look at that. I updated Weeble. It's purple now. What else they changed? Ooh, flashy lights. Eyes coming down here. %on WeWork. And 11.5 on GNS. What's our lick doing? Down 25%. Stuck again. Ouch. You know, my entry into it wasn't really like a entry size entry. More of a like one-time buy entry, unfortunately. So, here we go. Still a little loud. What's AMC doing? Oh, it's pretty much flat. You guys break $1? Dollar holla. AMRS up 113 now. Whoa, it's ripping. Proterra also. Big bankruptcy bounce. 38% on Wii. On SDC. Look here, just getting dunked on. Just Fresh is down 12, Mullen's down 10.5. And check is JH buying more. ETGN down 8. Tup's down 8. The Weeble's saying their earnings were yesterday. Don't think so. down 7. XPEV is down. Guten Morgen, kitty daddy. $20 on GameStop. GNS come down a little bit. There you go, RAD. Hold. Hold. See a big break on Dish. Big break. All right, 12 minutes till consumer sentiment. AMRS. Got 100% on there. We use 30%. Proteris 30. Liquor's down 27. Ugh. What's Joan doing? Joan's up 1.5. Alright, 10 minutes consumer sentiment. Neg is down 1.6. That's a shame. Carvana's down 0.35. It's an upstart. Upstart's getting a little bounce. 2%. That sell-off was beautiful. Won't go down 1.7. GNS gave it back. Only up 3% now. Those are their bankrupt one. Yell. GLTO. Biotech. AMC is up 1. Tupperware's down 11.25. See if we find support on this trend. Whoops. That would also be right about that 50% retracement. Interesting. IV's come down quite a bit on top. DGN's down 10. iNod's up 10. Oh, 15. Digital Data Solutions, Synodex, Agility. Oh, they have AI in their description. Groupon's really held this rally pretty well. It's up 9% today. Big daily candles. Oh yeah, PGY. You guys still in PGY? Sundial. Earnings on the 14th. Up 1.5. We's up 40%. Proterra gave it back some. Liquor's down 31. Jeez. I didn't even check like insider lockup period or anything. I don't know if they were able to sell. Looks like they might have been able to. I don't know. That's just what I think when it does so awful. Right out the gate. Like insider selling. I haven't even checked barbecue. Barbecue 2250, down 0.8. I knew you guys would have my back. Let's see. Oh my, it's a tiny company. There's 3 employees. Can't tell if there's a lockup period or not. Okay, consumer sentiment. Wait for the candles. GNS filled his gap. Nice. Well done. Hey, turtle. Oh, I missed your tip yesterday, man. I don't know why I wasn't getting alerted. Appreciate it. Jimmy, wake up. I think Jimmy's on its way down. Yeah, there you go. GNS cap filled. I mean, 20 is kind of a psychological level, I guess, but it's not really shown any support there prior. I guess kind of in this range. Whoa, consumer sentiment is ripping the market. A pow. Dang. There you have it. Gap fill time once less buy. Let go. Bye. I did take some calls there from that first little pullback after the bounce. Closing some of them now. Nice. Nice on the move. So take a little off. Yeah, contracts jumped like 35%. That's crazy. Lost almost all of it. Yep. Usually you don't get that kind of return that quickly. But yeah, that's what you're here for, is the gamble. Gamble to get that dopamine hit. Are you not entertained? Definitely want to look for some more entries to the long. Buy straight ripping. GNS get back some. Groupon popping up there. 14%. I'm gonna stop on the rest of these for break even. No reason to give back profits today. Little we have. $35% on liquor. Jeez, man. Heard Ryan Cohen's name. I went crazy. barbecue down 1.3. It's at 22.40. I just had to stop on this thing, maybe. GNS catching a little bounce there. 7%? Oh, that's just VWAP, I guess. No big deal. He's holding 33%. Looking to add into my calls on SPY. We got Tupperware. Where's down 12? Barbecue's green. 0.84%. 22.89. Gold barber coating. Neg is green. Almost 1%. Thank you very much. Carvana up 1.5. Line's coming down a little bit. Maybe VWAP test. Maybe I won't stop out. Last few contracts. RAD. RAD is green. Yes. Do it. Lux green 1/4. RAD's green 1/2. Fish is down 1%. GNS still up 7. Got some more calls there. Wee up 33%. Groupon rallying still 17. Filling the gap. Gap's almost filled. Groupons ripping, man. 18%. That's a big breakout on it, really. That's no accident. Got resistance up there at 947 area. We did some theta farm on this, but never got another pullback to re-enter. Well, that's not true. There were some pullbacks. I just didn't like it after that lofty move. But it's had continuation. That's awesome. GME hanging on 20, down 0.05. Barbecue 2288, lightly green. Take a little profit on these. Whew. Go, baby. That gap's filled now. Yeah, gap just got filled. So, see if we can make it back up to some moving averages. Looks like a pretty nice bounce so far. Again, we could be building kind of a head and shoulders to break down out of this trend, but so far it looks like we're getting a solid bounce on the bottom of that channel. So potential to head back up top. Picking off a couple more here. See. I'm gonna stop at my break even on the 446s. SPY ripping up there still. Okay, SPY. No climbing. GME's up a little bit, little pop. See if GME's going up to retest resistance up here with the SPY. EVTOL's up 6.5 on EVTOL. How much my buds. That feels different, huh? A little too quiet. GNS is up 5.5. Pretty slow Friday. Groupon's consolidating up here. Nice move on the group. Earned 40% on AMRS. Oh, a little pop there on GME. Yo, pop it. Hey there, pop it. Yeah, GME's retesting that support line. Prior support, new resistance. When does Liquor House bounce? Couple days. On 38%. Radical up 3.8 now. Good bounce off of that 61.8%. Golden retracement on the fibs. We can maintain the bounce. Pelodoc up half. 3.8 on RAD. I maybe just need a gap fill. We'll see. Either gonna add to my calls here or close out of the rest. Now market down 444.50. What VWAP? Might have a little more of a pullback before it keeps going. and close out the rest of my calls. Maybe pick some more back up. We'll see. Next up 1.6. We got Carvani, 0.5%. Yes, RAD up 5. Nice. Nice bounce on that level. Could get more. Could get more calls. Brokers. Stupid. E-trade. Stop. Like, go. Don't stop. Stop messing around. I'm not going to average in. I missed the bounce bottom. It's hard to get in and out of options on RAD for some reason. I don't know. Like, just weird. Okay, I'm back into some calls. %6 on RAD. Actually, RAD. Finger motion. Yeah, 6.6 on RAD. Finger motion's up 6.7. 6.5 on RAD. Top is down 12.8. I put a stop on those contracts for break even. I'm getting a little double top there. Thanks, Guts. Kazunhei to you too. Call leaps. Noise. Yeah, I thought about doing that with Tupperware. Doing a little buy right. Kind of missed a good day to do it though. Oh, I just stopped out on those calls. Wait. Today is better than the last, I guess, 2 days. And I don't know if I would ever do leap covered calls. I would only do like a month or two, maybe quarterly. Some halts. We had liquor halt this morning. That wasn't cool. Down 41%. The way of the IPO. Doesn't matter your cost average. It matters on how much the premium is on the contract. You're gonna get the most premium you can. So even with covered calls, you're still trying to time it. He sells covered calls. Then next week this thing's back at $3 or $4. This call is going to be underwater by a long shot. What if this squeezes $10? But yeah, that is how cover calls work. But you still want to do it at a high. It's like shorting it. It's like either like selling shares, you consider it, or shorting it. You don't want to do it at low. Can help it. Thinking maybe going short now. Too soon to call it, but we have a little double top there. Yeah, that's what I don't like about doing it in one order, the buy and the right. I call it a buy right, but I like to buy when it's down here, right when it's up here. You do it in one order and it's, yeah. It's a way to do it. It's the easy way to do it. Immediately hedging your position. GNS popping up there, 7.7. I think SPY might have one more little push, maybe, we'll see. GNS popping 90 cents there, 10.5. Yeah, MC popped up there. 3.3. GME kind of hanging out that resistance. It might break back up into it. Back up into that area. Could be. Yeah, GNS is popping there, 11.5. RAD kind of chilling back out, 4.6. So many ways to lose money in the market and make money. New high there on GNS. 12.8. See what happens when we get back up here to $1. Buys come down a little bit. Yeah, the buy right is a good, it's a very safe play to do at the same time. That's the safest way to do it. Then you're basically just, if it goes up, you're guaranteeing yourself profits. You're just capping them, of course. So yeah, I'm in those puts. Might be a little premature on it, but already riding pretty good profits from those calls. Top is down 12. Flicker down 41. Barbecue's up 0.22. We gave back some gains. Only up 18 now. GNS hanging out at 12.3% green, 91 cents. Resistance at $1.03 area. Anywhere from like 99 cents up to like $1.03 or so. New high there on GNS, breaking out a little bit. 13.85. My entry on these puts wasn't the best, so put a stop on them probably. Take profit here at VWAP at least. Taking a couple off. Taking the rest off. I think that was a little bit profitable. I don't know. An ugly entry. GameStop use that resistance again. Surprise, surprise. See if you do an inverse cup today. We should be testing the lows. Or if you get a bounce here near VWAP. Or somewhere rip. GNS breaking out some more, 15.25%, 93.90. $94.80. Barbecue hanging out still there, 22.90. Yeah, America wants to just dance around here around VWAP. IEP still climbing up 2%. Went back along there. Whoa. Top's down 11.8. So it did. %50 retrace too, right there where we were bounced on. When is September OPEX actually? Is it the 15th? Or the 22nd? I'm closing out of those. Oh wait. Let's see. First 8th. Okay, it is the 15th. 15th. Games moves up right before. That used to be the case. I don't think they're tethered now unless there's volatility. At least you don't see it. SPY is breaking VWAP there. A little bit. There was a time where they would kind of, they would do that, where AIMS would kind of front run it, even without the volatility. I think it's been like a year though since we've seen that. Now I've just noticed it during volatility. I guess steep move up on either one of them. So I think they're hedged on the volatility swaps or whatever. That's where it gets out of control. The basket. Okay, I got back into those SPY puts. Got some 4-4-4s dailies. I'll try and hold these till low of the day. Look at that sell-off on GME. GNS new high there, up 17.2. See if SPY wants to finish this inverse cup. $9.55 on GNS. Love my smallest plays, do the best. Biggest plays do the worst. Let's check out top. Alright, SPY's coming down a little more there. RAD came back down some. Back to VWAP. BBBYQ is up 1.3. That is neat. Open doors down 5. Why hasn't Carvana sold off? He's really held on. Pelly. Peloton has earnings at the end of the month. 8/23. Wheels up. Up is down 4.2%. They got a cash injection from Delta or something. Base is down 3.5. Yeah, I'm out of those puts. Little chop. Neg's up 2.5. Dish is climbing a little bit. RAD 2%. GNS holding 16.7. besides 103 on GNS? Up, higher, more. Let me see. 111. 130. A gap fill at 140. Um, 150 and $2. Not a whole lot between 150 and $2. I mean, yeah, there's smaller levels. I'm just kind of mentioning those smaller resistances. Yeah, there's a gap at 280. Next big resistance would probably be 3.5. Like major. I don't know, the chart's kind of crazy. There's a lot of liquidity in here. That 2.5 range too. Probably find some definite sellers in there. Barbecue is now red.
Swim. Bye.
5. So let's see what happens. Because you see right now it is holding on to some green. It's up 40 points. While the S&P is at 4456, down 12 points. The Nasdaq's down 0.9%, 14,994. So below that 15,000 mark. Small caps down just fractionally. We finished most of earnings season, but there are still some important names to follow. Kevin Green, senior markets correspondent, taking a look at developing stories because we want to look ahead to next week. We have some big names: Home Depot, John Deere. What are people expecting? What are you watching?
Yeah, for Home Depot, we are going to be anticipating a little bit of a decline on a year-over-year basis when it comes to revenue. The street actually has an estimate right now for $42.2 billion, and that would be a 3.5% decline on a year-over-year basis. And earnings are also supposed to drop on a year-over-year basis as well. The street has an estimate of $4.46. That would be down about 11.7% year-over-year. Now, the biggest question is going to be the consumer spending trends. We have seen housing continue to, as far as demand starting to slow down, mortgage applications are starting to slow down, but we are also seeing the fact that existing homes continue to be elevated when it comes to price. So there's a bunch of analysts out there that are believing that those that are within their homes and are not choosing to sell right now will start to reinvest back into that home. And obviously Home Depot could be a play on that. So that is going to be one of the expectations that we want to be able to hear in the conference call as well as in the earnings announcement. Another is going to be the deflationary pressures that we have seen in lumber. Lumber has pretty much collapsed, Nicole, when you look at a year-over-year basis chart. And that is something that's going to impact the top line, which is why that's already built in for a year-over-year loss. If we actually do see a little bit more of a deflationary pressure when it comes to lumber and Home Depot, that could also impact their bottom line number. That would not be good. Last but not least, if we do see somewhat of headwinds because of the economic shift in spending for consumers, going from not only just spending on goods, but still focusing on services and experiences, that could be a little bit of a headwind. From a charting standpoint, we are approaching an area of resistance right now. If you look on a weekly chart, a 3-year weekly chart, $330 is a significant area of resistance. Hopefully the earnings beat them both the
GNS
top
made
and
a nice
bottom
move.
line. It can break above that, and that's when we can see a breakout.
Right, understood. All right. Thank you for that. And, you know, when I think about Deere, I mean, any final thoughts there?
Almost back up to the high that it pumped to that one day.
Year to date. Any final ones there?
Pumped and dumped.
Deere continues to move to the upside. So this is a part of the industrial sector, and industrials have definitely seen some actually upside moves over the last couple of months because of the weakening of the dollar, which then makes multinational companies, especially industrials, a little bit more attractive and competitive when it comes to price. So that's really what we're going to be focusing on here. They also are going to have some tailwinds when it comes to federal spending and government contracts, and the fact that they had low inventory for their consumers over the last year and a half. That continues to be a pressure for consumers. So that's why demand continues.
All right, Kevin Green, thank you for that.
A little slow on the stick there, Nicole.
Next week, we appreciate it. Kevin Green, senior markets correspondent. All right, time to spotlight a big name here, LiveRamp, the tech company hitting a 52-week high yesterday after crushing revenue estimates for the quarter. Joining me right now, Scott Howe is with me to talk all about
Price coming down, real slow melt.
The stock got a nice jump too. What would you say? What were your takeaways from the quarter? I'm sure you're very proud of the team.
Well, first off, Nicole, thanks for having me on. I'm a huge fan, and so it's nice to finally be with you. We had a great quarter. Just by way of background, there's not a company on the planet that doesn't want to utilize their data more effectively. And they know if they do, they can deliver better customer outcomes and generate better results. LiveRamp helps companies do that. We work with some of the most sophisticated companies in the world to ingest, make sense of, and activate their data. And this is particularly important right now, Nicole, because there's so many megatrends that make data even more important. Digitalization of television, cloud computing, artificial intelligence, and data collaboration. Every company realizes that they need to share and collaborate with one another. And so we sit in the intersection of that. We had a great quarter. We beat on both the top and bottom lines. I think a little bit of that is surfing the mega trends. And quite frankly, I think a little bit of it is just execution. We have a great team, and they work hard to generate results for our clients.
Yeah, and you've been signing on some bigger customers too, right? Tell me about that, because that's part of the growth plan, isn't it?
Sure. We really tend to work well with very sophisticated companies. So, you know, it's the Googles, it's the Walmarts, it's the Amazons, it's the Snowflakes of the world. All of them are clients or partners because they tend to be some of the most sophisticated companies in terms of thinking about their data. And so that's really been a focus for us. Over time, we think that we can expand successfully into smaller companies. They need to get sophisticated about their data as well, but that's going to require us to build more self-serve capabilities. We're a platform. 80% of our revenue is SaaS, so high predictability, but we think a long way for growth for us.
Yeah, tell me about some of the marketing. You said new marketing channels. Tell me about that and why that's something important, how it fits into your big picture.
Sure, Nicole. I've heard you talk about this yourself. So there's a big shift from linear television to CTV. And whenever that occurs, digitalization of different destinations,
Morning, Tasty.
there's an opportunity to use data. And so we're right in the middle of that. Likewise, there's a big shift towards cloud computing, which allows every company to process a lot more information very safely. Once again, we're right in the middle of that. And then third, there's a real inflow recently
Hi there on
of
GNS.
artificial intelligence.
98 cents.
That can be used for campaign personalization on television, programmatic companies like the Trade Desk.
88.99 was the high it hit the other
Google's
day.
TV 360. Once again, we work with those companies, and we're right in the middle of that.
Yeah, tell me more about that part of it. When you see this shift away from linear television as we know it, and moving to CTV and more on the AI stuff, because we're hearing more and more CEOs using AI, generative AI, on the conference calls. I mean, it's like the #1 phrase. Sure.
Well, I mean, let's start with the shift in television. And we both lived through this, right?
Did EU
Because if
close
you think
8 minutes
through
ago?
4 years ago,
Thanks, guys, for your
pre-pandemic,
likes. I appreciate
only a
it.
small fraction of
Got
television
14 likes today.
was actually CTV. It was about 15%. Now it's over half.
Thanks for the support.
All of us have shifted how we consume television. And for advertisers, that means there's a different way to message us more effectively, more respectfully, with messages that are going to resonate with us. On the AI front, you know, I think the hype is real. And I think it's really going to change a lot of how data is utilized and a lot of workflows as well. And I'll give you one example. One of the biggest challenges that we face is crunching data is hard. Our clients have to hire sophisticated data scientists and write SQL queries. Well, a typical SQL query takes about an hour to execute, and most of it's rote work. You can replace that hour in a millisecond with AI because it's just automation of a rote function. And so there's going to be an explosion in companies' ability to distill data, figure out what it means, and use it to power more effective business decisions.
Yeah. You know, I don't know what your competition looks like. I mean, you mentioned some really big customers of yours. You said Google, Amazon, Snowflake. I'd like to more about the customer identifiers with Ramp ID. What is Ramp ID exactly? I mean, does everybody want one?
Well, think about Ramp ID as the equivalent of the freeway system or the Transcontinental Railroad or the power grid. For companies to utilize data with one another effectively, there needs to be a way to kind of link together, a Rosetta Stone, if you will. We call that Ramp ID, and we think the industry is best served by a small number of folks that serve anyone and everyone in the industry. So you mentioned competition. I have the funnest job in the world. because almost any company in the world I can have a conversation with and say, how can we help? We even license our technology to companies that we consider to be competitive with us, because we know that that's good for the industry to get everybody on the same grid, on the same standards, such that data becomes portable and democratized, if you will.
Good to see you, Scott Howe, CEO of LiveRamp. Thank you so much for being on with us, and certainly saying a lot of things that I fully understand as the world is changing and evolving, and you're right at the forefront. Thank you very much. Appreciate it.
Thanks so much, Nicole.
Coming up next, the disruptors. We're watching DigitalOcean. Well, it lost more than 10% in the last couple of weeks. Had a tough earnings.
GNS might have resistance here. 4 hops. Yeah, I like those. That's right.
The ego on you.
The ego on you. Thanks, Guts. Appreciate it, man. That's what you're holding out for. I thought you were holding out for a like. Thank you. Thanks for joining, Guts. Appreciate that, man. I think you're on our Discord. If not, send me up on there and send me a DM. Get you get a happy crew roll. Actually, I need to jump on the voice in there. I forgot. And I need to give you guys a link. To the party, pal. Kind of a condescending pal you said there. I was chopping around. I'm trying my best not to just give it back. I've given back a lot of the gains already in this chopping, actually, unfortunately. So, trying to be very patient now. I think we're going to get a full inverse cup, but doesn't have to. Spy's climbing up a little bit to VWAP here. Sickness might be traveling a little bit into my head. I don't know.
A little bit short based on some visibility and also some revenue recognition issues associated with when they actually had some billings that were booked in the quarter versus next quarter. So overall, you know,
Pizza parties on Friday. I think we will get pizza. Thanks, guys. Appreciate that.
Reason why the guidance
Appreciate
was
the compliment, man.
to the downside on a forward
I
basis.
think we're due for
Seems to be that they're looking to
Friday
book some
pizza
additional
party.
revenues in Q4, and that's why for Q3 they lowered their guidance. But see, if you look at the analysts, this is interesting because the stock itself is actually holding up quite well after it went down about 30% on the 3rd of August. But Morgan Stanley actually moved the stock to equal weight from underweight. They increased their target to $36 from $30, despite these lower guidance numbers that the company provided. While at the same time, there's an adjustment made by Barclays, who maintains an outperform rating on the name, but they did lower their target contingent upon the lower guidance to 42 from 58.
I see. So at this point now, when you look, and in light of you just mentioned the recent upgrade too, your thoughts on the example trade?
Yeah, so again, looking at it, you'll notice that on a daily basis, there's a huge gap to the downside. The low area on the 3rd of August was around $35, and coincidentally, if you look at how the stock has been trading since then, it seems to be stationary or has found some footing at that $35. So my anticipation is that we probably won't see much activity, all else equal, market conditions and so forth, in the stock between now and the next quarterly report. So that $35 may be a nice area of support. So what we can do is go out and simply sell a cash secured put, no pun intended there, $35 strike price. This is September, 35 days for $1.50 per share or $150 a contract. So effectively, if you think it's going to hold that $35 area between now and expiration of 35 days, you're selling for $1.50, and the objective is to have that value or premium erode to zero. Now, to put all this trade, you have to be willing and able to purchase shares at 35 if you're assigned at that level. Now, that won't happen unless the stock is trading below $35 between expiration. But in essence, your break even, if you get assigned the shares, is $33.50. And if you do earn that full premium, if the stock stays above 35, it's about 4.3% yield to strike in 35 days. So I guess on an annualized basis, that's not a bad return.
Understood. George Sillis, thank you so much. It's great to see you, George, every day for The Disruptor. Really appreciate it. Thank you. Coming up next, Alibaba smashed street estimates in the quarterly earnings report. So we've seen it jumping. There's also some big news out of China today and how that is weighing on some of these stocks. All ahead, Alibaba, this Chinese retail giant. Our panel weighs in next.
Let's walk through charts, one of the most commonly used features on thinkorswim. Start by going to the Charts tab and entering a ticker symbol. Select Time Frame to adjust the time intervals or to favorite a time frame. Select Style to change the appearance of the chart. You can add drawings by selecting Drawings, Drawing Tools, and then Type of Drawing. For symbol comparisons, select Studies. This also gives you access to hundreds of pre-built studies, including a number of classic patterns. The grid icon lets you view multiple charts at once. You can even initiate a trade from the Charts tab. Just right-click anywhere on the chart and select either buy or sell. For more demos on how to thinkorswim, head to the Education Center on tdameritrade.com.
The tear woke up today. 18% on that thing. It's crazy. One would say it is on a tear. Oh. LQR, 42% down. They cannot be matched. GNS flirting with the high again. RAD still up 4.25. Came down, tested VWAP. Showing nice support at 61.8%. I have a message for the Theta Farm. Theta Farm members on YouTube. Opened up another position today. I've scaled back quite a bit coming into CP and the market's very toppy, so I'm going to be very selective and careful on what I open, since it's mostly just a long strategy. Seems like the floor can get pulled out of some of these stocks pretty easily. Boring when you're not in on barbecue. The Theta Farm is boring as well. Not meant for excitement. It's dull when you're wondering how you're gonna pay your mortgage? Sounds pretty exciting to me. In the worst way. SPY back up to VWAP. VWAP now. Excuse me. Finally, it started moving. It was like an hour of consolidating, like tight chop, profit taking. Coming up on 12 o'clock. Big pop on GNS. SPY also had a big pop there. Oh, and you're not. Yeah, that's true. That's true. Yeah, holy crap. 35% on GNS. Lots of volume. Broke through that dollar. Well, didn't reject it. That's not a rejection. That's a breakout. Busted up to that next level, 111. Snoozeville. When all your bills are paid, you've actually fed your kids for once. Boring. 6 and 20? I mean, that's super aggressive. Up until it doesn't go up anymore. I mean, there's gaps. Actually, that's maybe the highest gap, that $2.80. We're just getting to $1. I'm gonna get ahead of ourselves here. And it's rejecting that. Okay, it's okay. My timing on my calls was literally the worst. Barbecue up 1.7. Ups down 16. Buys climbing up more here. See if we can come up and retest 447.48. GNS actually consolidating up there, just a big range, 32% to the dollar.
Three automakers over 4 years. Now, the big three have, for the most part, seen record profits over the past few years. GM and Ford just recently upped their profit outlooks. They've been in cost-cutting mode. Workers want better pay, but these automakers have to be very concerned about cutting costs and staying competitive against some of the other automakers that don't have union workers and don't necessarily have as high of costs. So we are seeing all three of these automakers lower today. It looks like Stellantis is the biggest loser, down about 1.7%, but they've seen a lot of weakness this week and really this month. If you take a look, GM shares down 12% this month, Ford down 8% this month, Stellantis down about 10.5% so far in August. Of course, July CPI also showed that new and used car prices continue
GNS
to
looking like it's going to make another move.
In turn, could mean lower profit margins and in turn hit the bottom line. So that could be also contributing to this weakness. But it seems like we may have averted that UPS. It seems very likely that we've averted that strike, but this is really the next one brewing. And
pretty
the next
good for
one that we'll have
Friday.
to worry about.
We're going to hold some gains.
And I think I'm seeing expiring on September 14th in terms of GM and Ford, that contract with the UAW. So it is certainly, going to be, I guess, appointment viewing, I guess, the next few weeks as they work on this. But any other things to take away from this story, or is it still very much a developing one and something to keep on the radar?
Very much developing, but I have to say Barron's made a good point in one of their articles recently, and we've been seeing this from some of the analyst community as well, that a strike might not necessarily be all that bad for these automakers. Could cause some near-term volatility, but at the end of the day, could be a good thing. Barron's basically making the case saying that if their costs rise faster than those of its rivals, it will likely upset the industry's competitive balance and really eat into profit margins. So a strike would show that it's, could be disruptive for a few weeks, but the automakers aren't giving in to these demands, which could in turn, do those things. Also, a strike could lower supply, which could keep prices higher for longer. And as I said, automakers are kind of dealing with
another one out
prices,
to the Theta Farm,
which in turn eat into profit margins, eat into earnings. Also, there was a Bank of America analyst, I believe last month, that made the case for basically adding to positions amidst all of this volatility in shares of
how much
Ford
money
and GM. Has a buy rating on both shares. And if you take a look at the price targets,
$50.
GM's price target from B of A, $75, Ford $23, well higher than where they're currently trading. Also thinks that as interest rates stop increasing so much, new car sales will pick up because it'll be a little bit less cheaper or a little bit less expensive to buy those things. So it's kind of interesting because, you immediately think of a strike as being bad. You immediately think of all the costs associated with it.
Break out there.
But kind of playing the other side of things, that it might not necessarily be in the longer term bad for these shares.
Yeah, it's interesting, Caroline. When you think of a strike getting resolved, it seems like resounding good news until you see the price tag for resolving that strike, like UPS went through, and that's, I think, the fears starting to seep into the auto stocks, and you see
back more
they've
gains.
been punished the last couple of days. Caroline Woods, thanks for coming on, as always, spending some time with us live from the New York Stock Exchange. Now, let's bring in
the
Director
GNS
of Trading Education at Charles Schwab & Company, Mr. Joe Mazzola, to the show. He's our first and second segment guest today. Joe,
he's our
thanks
favorite.
for coming on as always. Slow summer, Joe. This is probably not a time to overthink this market, but we got to talk about something, Joe. What are you seeing here? Did PPI do anything? Did CPI do anything to change your views on this market?
Maybe not those specific reports, but the effects that we're seeing in 10-year yields is maybe changing things a little bit for me. I think one of the things that we've been looking at is the spread between bond yields and then the earnings yield for the S&P 500. And we're back at levels that we haven't seen since 2007. So for those of you who are unfamiliar with that earnings yield term, it's basically the inverse of the price of the PE ratio of the S&P 500. So if the PE ratio is around 21, you got an earnings yield on the S&P 500 that's right around 4.5 or so. So if you look at 10-year yields trading at just shy of 4.2, right? And then you look at an earnings yield in the S&P 500 trading just around 4.5. That means that spread has gotten so tight that in order for investors, to continue to buy the equity markets, they're not getting nearly as much reward for the additional dollar of risk that they're putting into equities than what they could be getting.
GNS is ready to go for it
on a 10-year treasury. So, this kind of, Alex, you were talking about that tug of war around that 4,500 strike in the S&P 500. I think there's a tug of war right now between
new high there in GNS.
fixed income and equities,
1160.
That tight yield between the two.
Well, the trade-off, Alex, the competition for yield in the last couple of years, it hasn't been a fair fight, right? Yield's been zero, and people have searched for yield in this market. Now, like Joe just mentioned, they've pulled up equal to each other where there's real competition for yield. Not just stocks. You can move to other places. You can move into savings accounts. You get into money market. You move into bonds. There's a lot of places to go, Alex, besides stocks that may or may not be overvalued.
This is where I'd love to get Joe's thoughts on this, because he's talking about the valuation of the market being basically comparable to right before the great financial crisis. Yet we have competition for capital for the first time when it comes to places you can actually get a return essentially risk-free, or supposed to be risk-free. We kind of talk about it as if U.S. Treasuries are risk-free. Yet we don't necessarily have reason, looking at the economic prospects, other than conversations of a soft landing and hopes for a soft landing, that earnings have declined for 3 straight quarters. Things are not great right now. There's hope of a recovery. There's not necessarily robust guidance supporting that at this point. So we have this super premium on the market when all the factors in the background should be calling for the opposite. I think it's the most peculiar thing ever. I'd love to hear Joe's kind of thoughts on that.
Joe, go ahead. The floor is yours.
Sure. We keep an eye on the leading indicators, and one of the leading indicators is the S&P 500, right? So that that's positive, but the rest of them, boy, they haven't really been that constructive for the overall market. And I think you're at a bit of an inflection point where I think we've been talking about this, forever now. 15 months of consecutive decreases in the LEI, the leading indicators index. And it just really hasn't had an effect on the overall market as a whole. What I see kind of happening right now is this idea of, okay, we could be range bound for a little bit with some volatility intermingled in between, because that catalyst for that next move up, we had earnings, and while you can say, yes, a 79% EPS beat rate for the S&P 500 is a good thing, you're only around 59% of the companies beating on revenue. And here's one of the keys that I think is really important to look at. We talk about disinflation and being a good thing. Well, it's a good thing for consumers. It's a great thing for consumers, and it's probably a good thing for the economy. What's not a good thing for? Corporate profits, right? Because corporate profits and profit margins, they're measured on a nominal inflation base. So if you start to see that disinflation, as we've seen, right, that means that corporations can't continue to raise prices. And you guys were just talking about this whole idea of, what's happening with the UAW and what's happening with, with workers all around, where they're demanding higher pay. If that's the case, that's going to cut into corporate profit margins. And if corporations don't have the ability to raise prices anymore because you're seeing this disinflationary effect, that's going to have a negative effect on corporate profit margins, which could have a negative effect on stocks as a whole.
Yeah, the trend in labor negotiations throughout the spring and summer can't be lost on investors, and there's price tags for those. And you saw it in UPS. You saw it in GM, Ford, and Stellantis yesterday. It's real dollars, and it affects their profitability. All right, guys, let's take our first break of the show. Come back in a couple of minutes with our first trade of the day, and that is, as we get to the second half of earnings season, it's retail. And you know what they say? Retail is detail. We'll look at the biggest retailer.
Retail
Walmart.
is detail? I didn't know they say that.
Come back in 2 minutes with more Fast Market. See you then, everybody.
RAD holding 4%. Dish is up 1. Wonder if Dish will ever make like a big move. Have more kids, feel more pressure.
With their expansion into digital, and they've done a really nice job of that. And the stock's been rewarded. I mean, look, it is underperforming the S&P 500 this year, but it's still up about 13%. I think the reason you haven't seen more growth in the share price is because you're actually seeing some declining earnings that have really occurred since 2021, right? I mean, that was really a boon for all retail, and I think one of the things that has kept Walmart separated from Target and some of its other peers is that they have that food business, that agribusiness. It's more of a staple than a consumer discretionary when you look at the grocery business. That's really kind of kept them afloat. They've done a nice job of the product mix as opposed to, say, Target and some of its competitors. And as you mentioned, they've got the footprint. So, overall, as you look at the stock kind of heading into earnings, you're starting to see some analysts get a little bit more positive on it. I think Credit Suisse, Oppenheimer, Wells Fargo all had recent price target and ratings upgrades. Expected revenues of around $160 billion. That would be an increase of about 4.7%. And then expected earnings per share of about $1.70. That's why I said this is where the earnings have started to come in a little bit. That's a decrease of around 4.25%. Year over year, but all being said, this is a stock that when you look at the charts, I mean, the charts have been pretty fantastic from a technical level. It's a really nice defined uptrend, and I think that looking at that, you got to kind of try to figure out what's the catalyst to push this thing up above. I don't know if it's there. I don't know if you're going to get it from the earnings or the revenue number. It might just be one of these stocks that continues to just kind of ride up as people continue to move maybe down the price chain towards kind of the lower cost leader, which is Walmart. So they have some insulation, from potential recession or at least a potential downturn in the economy. They have that. But the one thing that I'm going to continue to look at when the earnings announcements comes out is I want to see what they're continuing to build from a free cash flow basis. That is something that they've really done a nice job over the last couple of years. Even if earnings have been kind of teetering out, they've done a nice job on the cash flow basis. The current free cash flow yield, so basically that's free cash flow per share divided by the stock price, is around 5%, which is actually pretty healthy in that industry.
It's interesting, Alex. Joe brought up a point that really has caught my attention when I look at these names, and that is the comparison between Walmart and Target. Mm-hmm. Two stocks going in complete opposite directions. Walmart can't catch a bid, sitting about 50% off its all-time highs. These companies basically do the same thing. Why or how does Walmart do it so much better than Target? Or is this just a, hey, Target's got its own problem and we're just doing our thing?
I think there's certainly Target-specific things that have impacted it this year alone, but these companies, while they're always compared side by side, are very different when you think about the types of things that you buy at their stores. They sell a lot of the same things, but Target is more of a, you know, home and garden section, kind of a perception of value but quality. Where Walmart is like, I'm going here to spend as least amount of money as I can. Hopefully no one sees me here, and now I can buy things online, which is nice. And I'm going to get in and out, and you know, maybe it's the closest thing to where I live. But it's not necessarily a place where you have a new room that you want to put some new furniture in. I don't know that it jumps to the top of your list as a store that you want to buy that furniture at. I think Target really has an argument to be made, at least in a younger demographic, to actually sell products that people really like from a discretionary standpoint. So this is where one of the points that Joe made, I think, is really, really important, which is he talked about this kind of trade down effect and the seeking of value and trying to, you know, tighten up your budget as much as you can, because despite what all the, you know, GDP now forecasts are and labor market forecasts, there is a feeling that things are a little bit tighter. And I think that's reflective of some of the sentiment gauges that we got that are still historically low. There's still concern in the general populace. And if you're going to a place like Walmart, you might spend a little bit less money. It might help a company like Walmart kind of weather this storm better. But if Walmart comes out next week and has good numbers, I'm not entirely sure that we can say all is well because Walmart's doing well. It actually might be a little bit more recession resilient or a little bit more trade down resilient than a company like Target. Target comes out next week and struggles. We might have something to say that discretionary spending has gone down a lot.
Joe, you have a trade force in Walmart, and you know Tom White and I talk a lot on this show about float. And we like to mention a lot of times companies that have very low float. Well, now we're at the other end of the spectrum. 2.69 billion shares outstanding of Walmart. So when this stock moves, it's a pretty big deal, Joe.
Made a lot of millionaires in Bentonville, hasn't it? Absolutely. So, I mean, look, I look at this stock, you know, I talked about the technical strength that you've seen, you know, on the charts with this name. I mean, it just continues to stay above the 20 to 50. It's really, really nice price pattern. The one concern I have is a little bit more on the fundamental side. You know, the stock itself is trading about 38 times earnings. You know, it's quite a bit above the 5-year average of 32, and the price to sales, you know, just shy of 1, which is not what you would consider expensive, and that's kind of in line with what we've seen before. RSI from a technical standpoint is 66. Like I said, I think it's, you know, for me, you know, the technicals look bullish. It's the fundamentals that, you know, are giving me a little bit of pause. And so by no means am I looking at this as a bearish trade. I'm looking at this as kind of a range-bound trade. And in doing so, I'm looking at a double calendar. And that gives me the ability to kind of participate in the upside and the downside within a range. So we're looking at buying the August 18th versus the September 15th, 155 puts, 165 call, double calendar. It gives you a wide break even. I do think sometimes you got to be careful when you see that. Because what happens is, you know, once an earnings announcement comes out, not only does that front month implied volatility come down, that back month implied volatility is going to come down too. So you just got to be mindful of that. But what I do like about this is, you know, if it does stay kind of range bound, you can either close the entire trade or you can continue to roll those options down for a couple more weeks since the weeklies are pretty heavily traded. You can roll this all the way through until that September expiration.
Yeah, Alex, this is not a 1 week earnings play like we talk about a lot. You're doing a month double calendar for basically about 95 cents per calendar spread. Very inexpensive.
Yeah, huge discrepancy between the September implied volatility of about 21 and the near 33% and climbing volatility for next Friday. This is a strategy that if you wanted to establish that long strangle in September, but utilize that earnings volatility to help finance that makes a ton of sense. I kind of like that it has a little bit more room to the downside. It does seem that with the stock price being pretty extended here, there would be some asymmetric risk to the downside. But hey, just because this has been a winning stock doesn't mean it can't go higher. So I like the coverage on the call side as well.
Yes, I mean, this gives you the opportunity, not guarantees nothing, but it gives you an opportunity if it moves towards one or the other strike, and there's some time involved, but absolutely, this gives you an opportunity to be profitable in either direction. All right, I want to thank Joe Mazzola for coming on, as always, spending some time with us on a Friday, as he always does. Now, let's take our next break, come back with our Likefolio segment. We'll break down Monster Energy. The next two segments, we're talking about energy drinks, so if you're feeling a little lackluster, stay with us. Likefolio is here to talk about Monster Energy. Let's take another quick break. Come back with more Fast Market. See you then.
Hey, Jay from the Bay. What's up, man? I'm on a tear. There's GNS 1170. Radical 4.25. Up, down, almost 15. It's bouncing back to VWAP here. Is on a 50% retracement. Barbecue's up 1.3. A 1,000 people are missing now? Yeah, I was just reading about that last night. That's crazy. Saw some pictures of it. Like a people just abandoning land and jumping in the ocean. Oh, we settled down, huh? He's only up 11 now.
Enthusiasm, if you will. So, you know, we're seeing that mentions are kind of drifting. Purchase intent, when you look at consumer demand, it's actually
I don't know about how it started or
year
anything,
over
you know?
year, but last quarter it was 38% up
any
year
of
over year.
that.
So it's going in the wrong direction. So while they're still growing, the pace of growth is actually slowing.
Must not
we're
have
also
good,
seeing a fairly significant drop in happiness from 77% happy.
I don't
to
know. I don't know how you can't put that
65%
out.
happy.
Just crazy
So
wind.
That's always a concern when you see a
Don't have
move like that,
enough
and when you're not
fire
getting
suppression there.
a surge in demand. When you
They
see
should
a
have
surge in demand with like folio data, a lot of
boats,
times the happiness
boats
comes
with
down.
hose.
Kind of and it's just sort of like mean. But when you don't have a huge
Boats with
growth
hose
in demand
and
you do have a pullback
you
in
know,
happiness,
fire
that's a little
trucks.
bit of a concern.
They have that
As you
thing
can see
surrounded.
here in this purple line, that's the happiness. Red's unhappy, green's happy.
I mean, we know Hawaii has
between the
boats and
two.
hose.
So we're seeing a 12-point drop from 77 to 65 on a year-over-year basis. So we're a little concerned there. Now, on the plus side, I mean, they are dominant in energy drinks. You cannot deny that. They're about 81% of all mentions of energy drinks are Monster. So they're the big player. They're the one to beat. And they're showing some ability to innovate, you know, coming into the alcohol space. So, you know, I'm not going to completely hate on this company. I think that they're doing okay. We're just seeing some sort of yellow flags, I guess, early warning signs that maybe they're starting to lose some of their momentum. And combine that with the fact with one of their biggest competitors just continually crushing it, Celsius. I'm definitely hitting the brakes on Monster. And
They call
you know,
Celsius
if
a
I had money in Monster,
continuous
I would consider
competitor of
moving
Monster.
at least some of it over into Celsius.
Yeah, it's
Let's
stopped
do
out.
kind of an industry kind of recap here then, Landon. I think the stock-specific stuff is pretty clear on where you
Wind
stand.
and low
But,
humidity.
you know, when this stuff first was kind
It
of
just
getting
says
launched,
DEW.
and, you know, maybe not first, but when it was really starting getting massive
It seems kind of
appeal,
crazy. They
was I
can't
was
get
growing
control
up,
of it. I
you
mean,
know,
they
it
live
was very
like
much
next to an
tied
ocean.
to things like motocross and skateboarding
They've
and
gotta have,
snowboarding, things that were
like,
kind of like on the risky
fire
side of
boats with
sports
hose.
and sort of risk
pumping
taking,
out of the
or sort of
ocean.
perceived that way. The names kind of
If it's
perceived
close
that
enough
as
to where
well.
people are
Red
jumping
Bull
in the
gives you
ocean,
wings, Monster
I don't know.
Energy, Rockstar.
That's
all
just
these
weird.
things are not
An
necessarily
island?
things that you associate with, you know, your 9-to-5 office worker waking up and you know, drinking for caffeine. Things like we would have, you know, coffee. I'm, you know, contractually
The market's so
obligated with my
choppy.
last name to actually drink coffee, so I'm not in this space. But,
Ugh,
you know,
ugly.
Landon, when did Red Bull
I've
lose
just
its
been
grip
happy
on
with my
this
gains
space?
here and
When did Monster
let her
become
go.
so dominant? And how big is this space now? Because it seems that, you know, kind of alternative energy drinks have never been bigger than they are right now. And Celsius, coming at it from a more healthy, kind of like fitness-centric realm, seems to have the widest possible net that they possibly could coming into this space, not being just associated with action sports. I know Monsters broke through beyond that, but it
back
seems
to
that they're always
VWAP.
going to be limited by that name and that realm
Bye
that
to
they started
VWAP.
in.
I think you're absolutely right. I mean, when you look at where the industry was, I mean, you're basically what you described as like ESPN X Games, right? I mean, all that stuff, that's who they were targeting. And the names are all in that realm. I think that Monster they shouldn't rebrand. They've got a great brand, but maybe they need a second brand that is a little bit less in that area. But you're right. Celsius is casting a very wide net.
GNS breaking
and
out
they
there.
are coming on like gangbusters. So the thing about it, though, is when you look at the industry overall, it's all growing. When we look at our data, energy drinks, caffeine, all of those trends are up. So it should be a rising tide lifting all boats. And still, when we talk about Monster, you know, I'm talking about how they're losing steam a little bit, but they're still up on a year-over-year basis. So they're definitely still benefiting from this growth of the consumer trend. It's just that one of their competitors is benefiting way, way more. So if I'm on the Monster executive team, I am very concerned that we've pigeonholed a little bit, just like you're talking about, and we need to cast a little bit wider net. And I know it's, it used to be all, ESPN X Games crowd, and it's not anymore. They've got a wider net.
$1.20 on GNS.
Say, but Rockstar and Red Bull, I think that they're a little bit more limited. So I think that they're doing okay on the brand level, but I'm definitely concerned if I'm an executive that Celsius is taking all of that cachet away with the sort of everyday 9-to-5 type person,
that'll definitely spread it quick.
The non-snowboarder, if you will. So that's my take on it. But yeah, overall the industry's growing.
Wind doesn't start fires though.
Spot. They've got a tailwind, Monster and Celsius. It's just that one's just seemingly doing much better than the other.
Landon, first of all, you don't have to apologize for covering Celsius because we're going to talk about that.
Wondering
in our
we were going to hear from you, Maui.
So we're going to cover both of these today. But here's my question.
Good thing you're not back there.
We talk about energy drinks all the time. We talk about what these drinks are made of. What about 5-Hour Energy? Where does that fall in this spectrum of all these? Is there any of those? Because if we're talking about your favorite thing, that's what I take if I need. I don't drink coffee. I don't take energy drinks, but I'll do a 5-Hour Energy every now and then if I need it.
Wow, I haven't heard that name in a while.
I know, I haven't either.
That's what you're talking about, those things that
yeah.
look like a shot? Hey,
ride the lightning bolt at Landon.
That's right. I think that hits you pretty hard, doesn't it? I don't think we track 5-Hour Energy. I want to dive into it to see where they're at. But
52% on GNS.
I think people want the larger can that they can sip on and drink over time and not, do a shot. Do you do a quick shot when you take it, or is it like sipping on it? Because I know it's very strong stuff.
Come on, I'm an Irish guy. How do you think I drink a 5-Hour Energy? Probably like a shot, if you think.
With whiskey.
Exactly right. All right, Landon, we got to wrap it up. Thanks for coming on as always and giving us great information, not only on Monster,
big day on GNS.
what we're going to trade in this segment, but on Celsius,
we got a gap
what we're
at
going to trade in the next
$1.37.
segment. So great coverage as always, Landon. Thanks for coming on.
Every day.
All right. Now, Alex, looking at a company like this, kind of a mixed results, still acknowledging that Monster's a high-quality company. And in all honesty, their marketing campaign, that scratchy M, it's everywhere in everything what you were talking about, the X Games and all those high-energy events. The M is on all those things.
I think it's changed, too. I think, 5-10 years ago, if you were walking around with one of those cans of Monster and you had it in the office, you might get a couple people giving you a
Snickers,
hard time.
Yeah.
I don't know if that's the case now. I think it's a lot more common. I think you encounter those products way more frequently. And you look, when I was growing up, this is what kids like. Kids like to drink these things. But it never really, it seemed, graduated to our parents were still drinking coffee or 5-Hour Energies or whatever it may be, tea, whatever it would be. But it seems now that it's broke through, particularly Monster.
Barbecue,
Celsius is on
3.5.
its tail now with it in its crosshairs from a distant second place.
23.50.
One thing that really stuck out to me that Landon said was that this is a growing industry.
Still
rising
growing.
tide that lifts all boats. So even if Monster were to stumble, they might just be in the right place at the right time in a very, very powerful position already within the space. This tends to be something. Morning routines is sort of where they're operating. You kind of just do what you want to do. So if you already like Monster, you're not really that incentivized to go try something else if you like what you got already. So
that's
I
steeper
look at
trend.
a little bit more neutral to bullish here, Kevin, in case maybe growth rates do start to falter a little bit. Maybe in case the optimistic story is not necessarily there. But what's the bearish one? Based off what Landon said, it seems like there's still a lot of optimism for energy drinks. And so I looked at selling a put vertical below the market. We just
any
got
reason to buy
earnings.
barbecue?
Bounced back quickly from the results. Looking at selling the 57
Does it have any
55 put vertical below
new
the market
DD on
in
barbecue?
September. I looked at
Electric
50
lines? Oh,
cents,
man.
1/5 the width of the strikes here.
Yeah, that's a lot of wind.
Risk reward ratio, but of course you'd accept more
knock
if it
over
was
some stuff.
trading for a little bit more, which I think.
Is there any new info on
this
barbecue?
moment.
Anybody?
55 cents now.
And so obviously the more that you're going to collect, the lower your risk is going to get, the greater your reward.
Almost
and the lower that
$1.30 there on
break-even. So you're always
GNS.
going to accept,
Glad I have a
more
very
of
small
credit,
position in
but
this
looking
play.
at it with 50
Wouldn't
cents is sort of
wouldn't want too big of
price
gains
for
on
the
this one.
illustration purposes. You would simply subtract that 50 cents away from 57.5, get to a 57.
I don't think I had much buying power
break
actually
even.
when I bought
And
in.
for a stock that's trading right now in real time at 58.16, it gives you a little bit of wiggle room. But what you're really asking for in this is not necessarily for this stock to go higher, but rather not go down.
Right.
And when you only got about 60 cents in cushion before your short strike in the price of the stock, you don't necessarily have a lot of room to be wrong. But again, you don't need to be right. The stock doesn't need to go higher. So whenever you can create a strategy that, 2 of the 3 scenarios you could possibly be profitable, I think that's interesting. And those 2 scenarios would be stock goes higher, stock goes nowhere, and of course the only one where you're at risk is if it goes down.
And remember, no weeklies on Monster Energy, so you got to go to the September monthly for anything further out. Not a big premium name, as you understand, but still, this is a way to get about almost 21 deltas long in Monster just by a short put vertical that bringing that short strike a little closer to at the money gives you some delta, gives you a little more premium. All right, Alex, great job. We're going to take our final break of the show, come back with Kevin Green, come back with George Tillis, and we're going to trade the other name in this discussion, which is Celsius Energy Drinks. Take our final break of the show, come back with more Fast Money.
GNS at $1.30. You have 100 shares? Yeah, I guess I'm doing better than that. Oh, I'm just playing. Yeah. It's okay. I mean, there wasn't like much consolidation. I guess I bought it on this day, of course, because it had done everything I wanted to do. Pulled back a bunch from there. Set up this engulfing candle. Started to flatten out. I was like, yeah. I mean, this would have been the day to buy right here in that engulfing candle. Or average in. I just didn't want to average into it, I guess. My cost basis was like 79 cents, I think. But yeah, it's going crazy. It could go really crazy. We've got a share recall coming up and stuff. Like, this might be it. See if we can get a low of the day here on SPY. We're gonna bounce right here on this support. Don't do it. There you go, Spice boy. We have a gap down there on SPY. Oh, that started to get filled this morning. A little bit more to go. The 444 is kind of a big level though. Right where we are. I guess a little lower. But then we have a gap down here, 442, 97. On my final trade of the day. I know I overtraded. It's not even 1 o'clock.
Tough day for the sector in general, but a really positive note and a pretty good looking chart on a company that You're right, Kevin. A lot of these companies, these startup electric companies, are getting thrown out with the bathwater, and Tesla, is the one that seems to be going. But this seems to be, and remember, this is a China-based company,
Tesla.
a real competitor to Tesla, and that could be a big deal in China, Kev.
Yeah, definitely. It's all going to be about pricing pressure and being able to get your production levels up and being able to meet demand. And I think NIO right now, they have rolled out several different models. And what they're also doing is not only just meeting the production and meeting the demand in the
Top's above
marketplace,
VWAP
but they're
now.
rolling out new models, and they're attracting customers to come into their showrooms. That was a noted point from their last earnings announcement. And that's another key driver where Tesla really doesn't have that much exposure when it comes to the actual buildings in themselves and having people coming in. Rather than NIO in the China market. So I think that's going to be the key sign here in the future. How can they bring about
barbecue rally a little bit?
How can they bring a price point that consumers are going to
4.5.
have? And then how are they going to be able to
You guys didn't tell me a reason to buy barbecue.
Go up against the BYDs and the Teslas of the world, especially in the China
Finally
market.
starting to turn around a little bit.
Yeah, weak day for this sector, but a really positive note on NIO going forward, something we probably need to watch going forward as it competes in China with
part
Tesla.
of
Kevin Green,
the
thanks for coming on, as
revolution.
always, spending some time with us. Have a great Friday and a great weekend, Kev. All right, now let's bring in live from Salt Lake City, Utah, Mr. George Tillith, to talk about our final trade of the day, and that is Celsius Energy Drink. George, we just had a great discussion comparing Monster Energy, the leader in this space, to the up-and-coming scrappy Celsius that seems to be gaining ground. The numbers are right there. What do you got for us in Celsius Energy? They just had a really good earnings report. Stock jumped, George.
It did jump. By the way, I'll just quickly, have you guys looked at the 5-year chart on this stock? It was trading around $4 back in early 2020. It's been a remarkable 4,000% move higher for Celsius over the past 5 years.
Wow.
And I think that really speaks to what's going on with our consumer culture, especially when it comes down to what they call functional calorie drinks, but also energy drinks, and huge demand for them. I think Monster Energy has been a very good branded company. Now Celsius is starting to sell quite a bit across the board amongst major retailers and wholesalers like Costco, Sam's Club, nutritional stores. But I think
18th is
the
the big
kicker for
date.
Celsius is they didn't have to achieve scalability on an organic basis. The partnership with PepsiCo has been remarkable for their business in terms of enhancing margins, but at the same time, you have to think about the consumer culture around these drinks. They're huge, and we're seeing essentially a stock that's up 75% year to date, and like I said, higher by 4,000% over the last 5 years. Now, if you look at the report, when it comes down to earnings, they reported just a couple days ago on the 8th, GAAP earnings were higher by about 24 cents relative to the estimates, coming at 52 cents, and sales at 326 million beat estimates by 48 million. Now, if you put the percentages together, that was an enormous 115% increase in sales year over year. And the other thing is, if you look at the forward guidance for sales, looking at it, that was 1 quarter of 115%. For the full year, by the way, it was 96% if you include all 4 quarters. But if you look at a forward increase in top line sales, they're expecting about 94%, while at the same time, looking at the next year after that, it's about 76%. So they're expecting nearly 100% growth over the next 2 years, but at the same time, EBITDA growth is expected to be about 117% on a forward basis. They're expected to earn more per share going forward than they have in the past, and you can see just the trajectory of earnings that have increased significantly since, at the very least, the end of last year, where the company lost 37 cents and just reported now this last quarter 52-cent profit.
GNS coming down a little bit.
George, they're
Looks like that
selling
130
and
is
marketing
resistance for today.
expenses quadrupled,
at least for now.
in that year that
Went up on 1
caused
o'clock.
them to lose money and go from green to red. Now it looks like they're
And-
circling back and they're positive again.
Are we
But
really
George,
only at 19
always
likes?
appreciate you coming on, spending some
You
time
guys
with us,
suck.
talking
All right, guys.
about the second energy drink that we're talking about today. Thanks for coming on, George.
You guys.
All right, now let's trade this name in NIO. Remember, they've already had earnings. They already had an event. And to look at this name, how do we trade it from here? If you look at the chart, it had a major gap coming off of their earnings release. And remember, they made
All right, I picked up some
52
barbecue
cents a
shares.
share. They were looking for, the estimates were right around 25 or 26 cents a share. So almost
Barbecue
double
sauce.
of what the earnings would be. In a year ago, their top line improved by 108%. They're expected to improve by 70% this year. So how do we look at a company like this? It looks like they're through their spending on marketing and acquiring customers. So now they look like they're turning back to profitability. So what we want to do here, we just want to look at this company and play it in a more passive way. And that is via, remember, we're post-earnings event, so volatilities have come down. So it may be less risky to buy some Vega here. So what we did, we went to the calendar spread family. And all I did
The SPY has a head and shoulders there.
take the price of the stock right now, currently about 172. I went out about a month, and I looked at the September 8th, and then August 18th, so about 3 weeks.
Not even
and
1
the
o'clock yet, so
185 calendar
plenty time
spread.
for a big
And
move
this
still
is
today.
one that you can get for about $3.30. I know it's a little more on the screen right now, but it's down to about $3.30. It's collecting data, giving you about 17 long deltas, and this is a way that you can play for a gradual move up towards $185. Remember, it's a 3-week spread, so you can extend duration on those August 18th calls that expire at the end of next week, and extend duration for a couple more weeks until you get into that September 8th. But this is a way, post-earnings, post-event, implied volatility coming down, that you can play a name like this with bullish, collecting theta, moving in direction. Now, if you think this move up in Celsius is overdone and should be, faded, maybe you want to look at the put side of the spectrum. But if you're bullish, remember the risk on this trade, the debit paid. And you can chip away at that net debit by extending duration and lowering that net debit, thus lowering the break-even cost on this trade. All right, so we traded Walmart today, we traded Monster Energy, and we traded Celsius. So some retail and 2 energy stocks. All right, that's our show for today, everyone. I want to thank Joe Mazzola. I want to thank Alex Coffey, George Tillis, Kevin Green, and Caroline Woods for coming on. For all of us here at the TD Ameritrade Network, have a great day and a great weekend. We'll see you Monday with another edition of Fast Market. Jenny Horn, Alex Coffey, coming up next with Next Gen Investing.
115. What are you saying? Daily support? I see maybe 111 for support. Or just back to $1. DD on GNS? I mean, like in the company? We know what's going on, I guess. More or less. Catalyst. The record date. Think of the 19th. You're talking about the actual company? Yeah, whatever. You've got VWAP at 108. Hey, I got fully filled. I'll put it on Discord. I don't know if it's a long-term play. I'm just trading it. I'm trading it for the squeeze on the X divvy date. I probably won't be holding past that, but we'll just see what happens with the charts. I haven't felt the best today, actually. Choppy market's tiring me out.
Happy Friday, good afternoon, and welcome to Next Gen Investing. I'm Alex Coffey alongside Jenny Horn. Let's take a quick look at where the market sits here. About 3 hours till the closing bell on the week, and a little bit of weakness overtaking the S&P 500 and crew here as we kind of, I guess, wobble into the closing hours of the week's trade. S&P 500 futures down about 14.5, NASDAQ down 143. Russell 2000, though, is higher by about half of a point, and the Dow Jones also up by about 29 points. We've got a fun show planned for you throughout the next hour. Coming up on the show, tons to get through. Of course, we kick off every show with upvote, downvote. It's going to be a little bit of an electric vehicles theme as we get to that. Of course, this name earlier this week as well. Now we got post earnings. We've got China macro stories all week long. Looking forward to that conversation. We'll do an earnings preview on Palo Alto Networks, PNW. That's been an interesting stock throughout this year, as it has made a pretty nice move off of its highs that it made late into the month of June, early July. Like much of the market, it has seen some recent weakness. We'll look forward to that earnings preview towards the end of the show, and then looking forward to under 30 to kick things off as well. You know, Jenny, as always, we'll kick things off here with upvote, downvote. It's very electric vehicle heavy here. This on a day where news around the general automobile area has been kind of making the news with this summer of strikes narrative I'm hearing that might roll into Ford and GM. But Ford and GM aren't on this list. This is pure play EV makers. We're kicking it off with the main player in the space, that's Tesla.
Okay, summer of strikes, I haven't heard that yet, but that is definitely very applicable. But these names seeing quite different performance on a year-to-date basis than those legacy auto players in a good way. I mean, we're starting things off here with Tesla, which is the largest company in terms of its market cap right now. It's up 97% on the year. It's down about 9% though on the month. It's seen a lot of weakness since its second quarter report, which was, I think, misread by the street, but nonetheless, we are still seeing shares down 4% this week. Also lower today, I mean, by about 1.5% roughly. It's still up 140% off its low. Tesla, though, has made a pretty big splash worldwide, now being one of the more dominant players in the Chinese market. The company did recently win a trademark case in China, but it actually wasn't related to its vehicles. So earlier this year, Tesla did launch its novelty beer, which was made available for residents in several of these European countries. Now, I thought this was so fascinating. I didn't even hear about this earlier this year, but Tesla has so much going on. It's not even necessarily surprising. We also are seeing now some of this weakness, though, in China, I think, persists into a name like Tesla here, Alex, because right now a lot of these Chinese ADRs are getting killed today. We'll discuss that more when we look at NIO, but I think a lot of this weakness, given the fact that China is right now the largest auto player in the around the globe, that we're seeing that weigh on Tesla shares. But it's been a pretty weak story just ever since that second quarter print.
Yeah, the China story has been a weak one too. This reopening hasn't been as robust as calls for it have wanted it to be, I guess, for the first half of the year. But I think I saw this morning. I want to say it was the Chinese yuan loan growth is as low as we've seen since 2009. I mean, when you start comparing back to 2008, 2009 timeframes, you're just bypassing all of COVID. Even you're bypassing 2015, 2016, where there was China hard landing issues. I mean, you don't ever want to compare anything to 08, 09 when it comes to the economy. I mean, that is like the worst comparison times that we can have. And so lowest numbers since that time frame, not really doing much to bolster sentiment. But there's been a lot of stuff with Tesla lately. The CFO leaving. A lot of uncertainty with Tesla. But you know what the one thing that I've realized has been? If you can't beat them, just join them with Tesla, because all the bears have just been stomped out except for like the 2 or 3 that they're not in hibernation, but I think they're licking their wounds always with Tesla. This stock is just such a beast. I know it's not on its all-time highs, but it's up almost 100% year to date, and this is after falling like $50.
Third best performer still in the S&P 500. So even though we've seen this weakness in this month so far, I think then we also have seen weakness in the rest of the market. Still third best performer in the S&P 500. People are so quick to be so critical of Tesla, I think because of Elon Musk. But I think when you actually look at the Tesla-specific story and some of the battery capabilities, their North American standard charging is rolling out. I mean, all these things I think give you plenty to be excited about. Our next name today, though, is NIO. NIO is still up 31% this year. But like we were discussing, Alex, we're seeing these bank loans issued in China fueling some selling with investors today with not only the EVs, the broader Chinese stocks. We are seeing this fact that County Garden dove overnight. That is a property developer casting some of their financial troubles and warning of a potential billions lost in the first half of this year due to this credit downgrade on the heels of missed bond payments, which is also weighing on overall investor sentiment, as well as we did see new loans issued in July by banks in China tumbled to around $47.93 billion, like you said. So some of these figures were really disappointing and warning of this economic downturn in China, including the first drop in consumer prices in 2 years, as a larger than expected drop we saw in both exports and imports. And that we got earlier this week. So that has weighed on some of these stocks all week long. NIO's fall put the stock on track to suffer its 4th straight day of losses. But we got news today that was actually positive on NIO. Deutsche Bank actually maintained its buy rating while raising its price target to $17 a share, up from $13, which would imply about a 20% rally from here. But this name, I mean, it's well off of its lows, like all of these names we're discussing are. It's up 83% off its 52-week lows, but down 13% this week.
Yeah, I bet Deutsche Bank was hoping that they didn't release this until maybe some of this China news that's just the broader China implications, wasn't in the headlines, because no one that's invested in NIO apparently cares about that analyst move today, given some of those other things. But you know what I have to say about NIO is, every time a new one of these pure play EV makers comes out, it's always the question of, is this the next Tesla? Is this the Chinese Tesla? Is this the insert Tesla? NIO was the first one. NIO was that first company that really seemed to take the Tesla model and kind of try to apply it in a different marketplace in China. It's more of a luxury car. It hasn't been the performer over the years that Tesla has from a stock performance standpoint, but it's certainly done okay. It's not been a great last 2 years, but we'll see where things go. Next one on the list, though, is Rivian. This is the newest one, I would say, that's supposed to be the next Tesla. We talked about Rivian either a week or two ago, or maybe earlier this week on Fast Market with a team from Folio. And I remember Landon Swan just outright saying, this isn't going to be the next Tesla. And so, no, it's still early days. I think the car looks cool. It's more of an SUV, or kind of a smaller baby truck, almost like a Ford Ranger size. But you don't see as many as you see Teslas, and it's not really as nice of a macro backdrop as it was maybe to be Tesla throughout the 2010s.
At least we see them, though, because I rarely see. I think I've seen one Lucid. I have seen a few Rivian. I think there must be one that parks near where we work, because I see the same one, and I'm like the Rivian stalker at this point, I think. But they did release those second quarter results earlier this week, reporting a narrower than expected loss while lifting its production guidance. We actually saw shares initially up 3% after that report. But this stock has risen 80% over the past 90 days as it continues to enjoy some of the growing demand from its electric pickup and sport utility vehicles, despite the fact that they were raising their borrowing costs. They made around $1.12 billion in revenue for their R1T pickup, their SUV and electric vans that they are making for Amazon with sale of zero-emission regulatory credits also made about $34 million of those sales. They were able to top consensus on at least a revenue basis, but they're still coming in with adjusted losses. I mean, we're seeing that improve on a year-over-year basis, as we should be with a company growing and expanding as quickly as Rivian. But although still negative, its gross margins also were improving. But again, when you read some of these figures, it's very difficult to me to then compare it to a Tesla, which has now been profitable for several years. It delivered around just over 12,000 EVs, 59% higher on a year-over-year basis, nowhere close to some of the delivery figures we get out of Tesla. I know it's new in this space. I just think you can't compare a newcomer to a company that has been well-established and now profitable for several straight quarters. So we are seeing now analyst news. BNP actually upgraded Rivian to outperform from neutral with a price target of $30 a share. This name skews definitely more to the positive side. Of the 23 analysts, there are 13 buys, 9 holds, 1 underperform. The average price target of around $28 a share does also imply some significant upside. But this name, with the broader theme we're discussing here, Alex, it is down about 14% this week.
What stuck out to me was the kind of slew of analysts that have weighed in since the earnings, seemingly all neutral to positive, all of which mostly, with the exception, it looks like, of JP Morgan and possibly RBC Capital. Might not be an exhaustive list, but at least those two are higher than the current share price. So a lot of optimism coming out of this release, at least in sort of how things are shaping up at Rivian. The one company on this list that I've never heard try to be the next Tesla, seems to be doing its own thing in its own way, is XPeng. But has that been good news or bad news for XPeng, Jenny? Because this has been a name that maybe has struggled at times as well.
Okay, so that's so funny that you say that, because actually I was going to make the comparison to Tesla based on the fact that they are one of the only brands in China that are offering the Tesla equivalent of their full self-driving or FSD software, which is still not available in China yet. Only a few cities have approved XPeng's version so far. But that is something to be excited about. The FSD is how Tesla then plans to make robo-taxis and some of these fully autonomous vehicles. We're still far away, and Elon Musk actually made fun of himself on their earnings call, saying he had been a little bit too ambitious with that technology, but expects it sometime this year. And I believe we were discussing that. We're like, is that even too optimistic? But XPeng does have this similar FSD technology, which I find really interesting. And they also really recently did unveil the $700 million stake from Volkswagen to jointly develop 2 cars for China. Again, the largest auto market in the world. So that was read as really good news. But the company's cash and cash equivalents nearly halved in their first quarter, down to around $1.2 billion. XPeng's deliveries have also stagnated at around several thousand a month. This name remains a little bit more split from the analyst perspective here, but this name has also been on an absolute tear. It's up 62% this year, so it's one of the best performing Chinese EVs. It's just behind Li Auto. It's down 23% this month and 12% this week, but it's still up 160% off its lows. So this name is like all over the place, Alex.
Yeah, and this is where you have to, I think, take beta into consideration. It's been on a downswing, and for a downswing for it is to go from, $23, $24 to $16. However, an upswing in this stock was $7.35 in the beginning of June before peaking out at $24.
Stop all the
So
options
these
on
swings
GNS
are
kind of
just
suck.
bigger when it comes to XPeng.
It's
Of course,
pretty
the symbol for
new
that
to
one,
having options.
XPEV. One thing I thought was interesting, I was at Whole Foods yesterday, and I saw a
IV's
Tesla
insane.
charging, and it was plugged into an EV Go.
Hard
so
to build a
lot of
game
these
but IV is
different
already so high.
brands and things
Just
that we're
not
talking
attractive
about on a daily
pricing.
basis, some of these next-gen type names within this space.
Yeah, it has potential
you're
for
just
sure.
encountering them, and you're seeing them more and more on a daily basis. Not sure we're seeing XPeng.
I'm
or
not
cars
picking a
anytime
date to
soon.
hold it till.
They got their own markets to deal with a lot of people, and address.
See, this date, August 17th, is like investor meeting.
Point. But it's encouraging, I think, to see this space continue
George Hamilton will be speaking.
more and more buy-in, both from an infrastructure
So that could be a
standpoint,
catalyst,
from the
and then
consumers
this
as well, at least here in Chicagoland.
August
I've never seen
31st
an
is
EV
the
Go
record
charging
date.
station, so I would have. That's exciting.
For
And I do
shareholders.
think I've been in more Tesla Ubers than ever
vitamin C,
before. You do
yeah.
definitely see them more, but I
feel
think
like
the
I'm just
argument is
kind of
always like,
tired.
does it justify their valuation? But that's a conversation for a whole another time. We'll be diving more into our two upvotes. Those names being Rivian as well as NIO are the worst performers on a year-to-date basis of the group, but still really compelling stories.
Whoa, cut Jenny off, why don't you?
Stick around. Next Gen Investing will be right back.
It's like some sort of Friday joke. Blast the music while Jenny's still talking. I dare you, man. Do it. I don't know. I think those Neos are pretty legit, actually. If I were to bet on another car company, another EV company, I think it would be probably Neo after Tesla. Well, no, sorry. It wouldn't be Neo. I don't think I can buy BYD. Be BYD. Neo you can buy, though. Your GNS calls barely moved? Yeah, they kind of suck. Even for selling, like theta farming, it's just the 5-cent spread sucks. Yeah, options on cheaper stocks are just in general more difficult. Like anything under $5-10, it's just options are not as nice. Yeah, that's true. You could just exercise them. But you're paying a big premium, though. That's what sucks. So if you have the $1 call, what's the break even on there? Well, these August ones have moved some. 180%. You got them yesterday. Got them on Tuesday. They've had a big move. We got a perfect fill at 5 cents. Gone from 5 cents to 38 cents. I don't mind just holding the underlying though. Barbecue had another little pop up there. 24.39. See if the next couple trading days is the little false breakout like we had here, or we actually start to build some right shoulder over here. 25 cent plus range.
Today because we're focusing on all things EVs, but we will start overseas here with NIO.
Yeah, and you guys hit it right on the head with that kind of varied performance over the course of the last year. I mean, it has been in, and I think technically still is in a long-term
Top paying out
downtrend,
11%.
but making that move back into an intermediate up, this right-hand
Liquor
side
makes me want to drink
has been a
liquor.
little bit steeper to the upside than it took for it to move to the downside, which is somewhat unusual. You know, typically we think of stocks falling out the window and climbing up the stairs, but starting to see a little bit of a short-term move to the downside. In fact, today, breaking down in the last couple of days, breaking down through a couple of levels of support, breaking that 1460 mark, then breaking at the 1330 level, and we get this gap down to a spinning top today that's just up off of the 30-period simple moving average. That spinning top turning now in the last few minutes or so into a little bit of a bullish hammer, so the potential is there for a bounce up off of this 30-period simple right around the $12 mark. But if it breaks to the downside, you've got another level of support horizontally there at 1125. If it bounces, it's got to get up to that strong resistance at the 1330. But RSI, that relative strength indicator in the lower panel, which is kind of suggestive of market sentiment, of momentum, that would suggest that there is a bit of a downdraft here on NEO at the moment, guys.
Right, and I mean, I think we've seen that in so many of these
Radical.
names, and really just August so far.
We'll
but
pop
also,
up there on
you said,
Radical
it's been
some
more of a
volume.
long period of weakness for a name like
7.5%.
NEO, which
Do
trades
it.
with a ton of conviction. This
Inverse
seems
head
also
and
a
shoulders
ton
here
of volume
on the
session, which is why
61.8%
I wanted to look at
retracement.
this name today, but now when trading this,
Yes.
considering that, Alex, considering we also do have some time
I
ahead of their
don't think I
September
want
earnings
more.
event, but that is coming up awfully fast. So walk through your too fast. I hate that we're looking already at September expirations for the options, but walk through what you're thinking for an example trade.
Yeah, Ben laid out kind of a support level and a resistance level, both of which one was in the 11.25 range, I think he said, and the other in like the 13.30 range. So looked at a strategy that's just outside of those marks and is a neutral strategy, selling premium here in Iron Condor in the September monthly cycle. You mentioned that earnings day, which I think is targeted for that
Up looks like it
first,
wants to
second
fill
week
that
of
gap, maybe.
September. It's going to fall within this particular strategy, so that is something to bear in mind. But what we're looking at here was selling that 11 put, selling that 14 call, selling that $3 wide strangle there, and then defining the risk by buying $2 wide wings. If we're able to get this for a 66-cent credits or thereabouts, it's about 1/3 the width of the strikes. It's $2 wide
Fourth day
spread,
for barbecue.
collecting 66
I think I was here on
cents.
the 18th.
Break evens on
The
this
day
would be
after the
10.34
investor
and
day for
14.66.
GNS.
You simply subtract
Coincidence?
that 66
I think
cents away from
not.
the 11, get to 10.34. Add it to 14.66. Total is $2 net of 66.
George Hamilton's going to buy
Cents, which
barbecue
is $1.34,
and squeeze the
or
shorts.
In real dollar terms, we're talking $134 in max risk potential. If we look at the risk profile, what it's going to look like, it's almost like a top hat. What you'll see here is
Buy making its decision here.
max profit zone that
VWAP.
works its way towards our break evens again at 10.34 and 14.66, and then continues down towards our max losses as we move further and further away from our short strikes before capping out at our long strikes for a max loss of 134. Max profit is the credit received. In this case, that's 66, Jenny. So about 2-to-1 risk reward ratio, 1/3 the width of the strikes or thereabouts. Risk defined, range bound, short volatility strategy, looking for some of those technical levels to hold.
Right, I think that's really well put, and a good way to look at a name that, you know, typically trades with some pretty high volatility. But now we're switching gears here to Rivian, which did already have its earnings event. And this name, I don't want to discount the fact that it did see 60% higher deliveries on a sequential basis. We did also see the fact that they made more vehicles. I mean, it's definitely improving as far as its balance sheet fundamentals go and its delivery and production figures go, Ben. But this name also is located in, I believe it is Normal, Illinois. I think it is an Illinois company.
Support.
So I'm always like on the move looking for them.
It has a head and shoulders here, but
rarely see them.
Doesn't break that neckline.
Yeah, and I'll tell you what, you know, maybe this is a case of Rivian getting thrown out with a little bit of the NEO bathwater and kind of the casting aspersions on the space as a whole.
RSI divergence up here.
We have almost the same kind of setup, right? This long down, intermediate up, short down. It's breaking support kind of right at the confluence of horizontal and the 30-period simple moving average, and sitting down right on that support around the 2160
maybe at a good spot.
A little bit of a test lower, but it's not staying
Want it
there.
to hold.
Buyers are stepping in below
Hold that 2350.
2160 and maybe pushing it up off of the lows. Not yet maybe enough to turn it around
Barbecue
to bounce it maybe back to
sauce.
that 24 mark, but that would be the upward moving step here. But if it breaks down, there's a fair distance for this to fall from that 2160 to really where that next solid level of support is.
We
Again,
dish rad
remember, levels of
barbecue.
support and resistance are never guarantees, but that
Yes, we
1760
do.
mark could be the next stopping point if this does move to the downside. And I tell you, we saw the RSI trending down in NEO. We're seeing the RSI in this particular case in Rivian leading price strongly lower, maybe suggesting that sentiment is falling off. And if this can't manage a bounce at this support, that's suggestive of some continuing downside movement, guys.
Yeah, and this 14% move to the downside this week, sure not helping momentum at all. And we're seeing shares also obviously lower today on the session. But great breakdown on both of these EVs. One domestic, one, of course, located in China. We will leave it there. Ben Watson, our chart master. So now, Alex, when trading this name, looking on a different approach, because of course this company is just frankly a different company as far as its business model, but also the fact that its performance is about, right now we're seeing an 18% year-to-date gain. This is actually the worst performer by a sizable margin. So walk us through what you're thinking.
Yeah, cool car. I think people like the product so far from what I've heard. Seems to be a name that retail investors have had interest in over time. But looking at a way to kind of buy into some of this recent weakness in Rivian, but do so in a risk-defined manner, using a trade illustration referred to as a debit spread. So we're looking at buying a call vertical, same September 15th monthly cycle, looking at buying the 20 call, selling the 22.5. We're able to do this for 1/2 the width of the strikes. That'd be a $1.25 debit. Break even, you simply add that debit to the long strike. You get to $21.25 for the break even. $125 in risk to make $125 the max possible profit on this bullish strategy. If we look at the risk profile, what you'll see is an elongated Z type of a shape. But unlike our credit spreads where we start in that max profitability zone and our risk is all lower, we start very near that break-even point. Right now in real time, Rivian is $21.65, so it's a little bit above that price point. But essentially in that wheelhouse of that break-even point, you need a rally to be profitable. Any move lower can put pressure on this strategy. So it's a strategy, I think, oftentimes that is deployed when you have an opinion on a name. So not to say that we do, this is just an illustration and a way to possibly play it if you have a bullish outlook. A more bearish strategy would be within the same family, a put spread in which you're buying maybe the 22.5 put, selling the 20 put. For a similar risk reward setup, just looking for the downside. But I think it's always interesting, equal risk to reward, and then break even near the current share price is sort of my loose guidelines when setting up this type of a strategy, Jenny.
Yes, and of course, this name, we already did get a nice earnings catalyst. We do know we have that major event behind us. But also, important to keep in mind for both of our example trades
Small
today,
losses.
that multiple legs can lead to higher transaction fees.
Big winners.
Can be assigned at any time. And carrying option positions into expiration can add risk, like unanticipated exercise or assignment. Now, coming up next, it's time for FOMO, so we are not moving too far away from this conversation.
They did it again.
Alibaba erasing its week-to-date gains, which moved to the downside today, almost down 4% on some of these macro headwinds.
Their sound guy today. Is he drunk? I would take calls if I had more buying power. Calls to high of day, maybe high of yesterday. Oh. Actually, I could do it on my other account. Of course. Of course. You're too slow. Missed the breakout. Wasn't planning on trading it. God, I could use my other account. Chart Masters. Sick to have something in the control booth. It does look like a golfer, huh?
Issue at this point in time, and they do not think the current headlines are sufficient enough to be able to model out what the impact could be on the company if this deal were to go through. But they do also believe that the likelihood is going to be a lot higher. Now, Bloomberg did report that based on the structure that is out there right now by the United Auto Workers Union, this could cost automakers over $80 billion in expenses. And this contract that they're trying to work out is supposed to be a 4-year contract. So that's very significant. And there are also reports that this could effectively wipe out profitability for a lot of these names. Now, that's to be seen. We also know that this is a new negotiation, so there's definitely going to be a little bit of back and forth. But this is right after UPS also settled with the Teamsters a couple of weeks ago, in which they also required or demanded having higher wages. So this is kind of a trend that we are seeing in the marketplace. This could also provide some inflationary pressures down the road, but we will see how this is going to pan out here. But the stock performance is definitely getting hit not only by just this issue, but others within the auto industry.
So, Kevin, I was reading this report out of Citi, of course, that we're discussing, and I thought it was so interesting. It's like this should be in bold letters at the top. Of course, it wasn't. That they do not think the current headlines are sufficiently reliable to accurately model this net impact from the negotiations. They're basically saying, like, this is kind of what we think, but we're not. It's not guaranteeing what we could even see this strike happening. So, are there still like so many unknowns with this, and we're just seeing overall pessimism weigh on these names?
Yeah, I think what Citi is really trying to state is that the rhetoric on both sides is really not being helpful at this point in time. Usually when we get to these type of negotiations, the rhetoric starts to calm down. You start to hear a little bit of compromise on both sides. That's not what we are hearing. And that unknown of what could actually happen if the UAW is going to stick to their guns, if you will, and really demand that they would like to have these wage increases. And if they're not going to budge, then obviously the impact could be the workers go on strike. You do not have auto production at that point in time, and obviously that's going to have an immediate impact when it comes to top line and bottom line growth here. So I think that's probably why they actually did have that comment, but they also do believe that at some point in time they will meet at the table here, and hopefully they're able to hash out a deal in the near term, because this uncertainty not only just impacts the auto industry, GM, Ford, and some of the other names, but it also will impact local communities as well that really do focus and center around auto manufacturing, like Detroit and others. And I think that's also going to be an area that we'll start to hear a little bit more about if this strike does go through.
Yeah, and I think these companies, I mean, obviously they need to work this out. They had labor shortages for the better part of the last 3 years. I mean, you can't have, mass unions walking out of some of these factories and plants. I mean, this is obviously an issue that they do need to quickly get resolved before we spook investors even further. GM shares now only up a modest 0.75% on the year. I mean, they just completely erased their gains. But we'll leave it there. Appreciate the insight as always. Kevin Green, Senior Markets Correspondent for the network. Now I'd like to bring back in Alex, and it's time for FOMO. So we are moving very similarly in this direction of EVs. Now we're going back to China. We are looking at the week that was for Alibaba, because they had a nice move higher yesterday, and then today just completely erased that. Now they're lower for the week.
Yeah, so it seems like the Alibaba-specific news was positive. It's just the China as a whole news is not so positive. So what do we make of that then? Obviously, we didn't get a chance to really recap these earnings yesterday, Jenny. Is that a situation where that's even relevant anymore? If China's this big worry thing, does everybody just ban and ship? Because that's kind of what the price action's saying today. Or are cooler heads going to prevail, and maybe this is just a big overreaction?
Or are people getting impatient with Alibaba? Because this has been, I mean, it's not just like today's selling. It feels like these names attempt to make a breakout and then they just fall back down. Alibaba shares are up about 8% this year, down 22% off their 52-week highs. They are still up 64% from their lows. But just the fact that they weren't able to hold on to what was a relatively strong earnings event for them. They saw revenue beat at around $32 billion. Their net income attributable to shareholders was up 51% on a year-over-year basis. The company also said they're pushed into overseas markets. We're seeing really strong results with revenue from their international commerce retail surging 60% on a year-over-year basis. Their cloud business, which is very similarly echoing some of the weakness we've seen, or just slowdown, I guess I'd say, in Amazon, did report revenue growth of around 4%, which was pretty much what the street had been expecting. But these results were dragged down by a drop in revenue from some of their top customers, as well as the reduced need for this remote work and streaming and education services in a wake of a more normalized China economy. However, they did see, naturally, no surprise, strong demand in their cloud business for training AI models. They did highlight the fact that they believe that the opportunity driven by AI services has just begun, saying that this is a technology revolution built by AI, not just an opportunity, but the beginning of a new era. So since the craze we've seen in AI here in the U.S., many companies in China have pushed then to offer their own similar products. ChatGPT is not yet available in China, but Alibaba did unveil a similar large language model back in April and did announce earlier this month they would be opening a version of that model to third-party developers. I'm sure that was a huge reason we saw a lot of optimism surrounding their report, because this name also wasn't exactly like outperforming on a year-to-date basis either, the second quarter print. But I think it is definitely today a much more macro China story. It really reminds me a lot of what I know they're completely different, but the fact that we did get that Fitch downgrade, we saw selling for several days after. It seemed like this doom and gloom sentiment set over markets, and I just think it's one of those wait and see things, right? Because this is still, it doesn't change Alibaba's fundamental story. It doesn't change what the earnings told us. I think now you just have to consider the fact that this is an economy that is not going to recover as fast as we would have thought. I think if you've been following this space, this frankly shouldn't be a surprise to you.
Yeah, I think investors are saying, okay, you can wait and see, Jenny. We're just going to get out of this stock today because it's down pretty substantially, almost 4%. Buybacks seem to be a big part of the quarter to me. $3.1 billion worth of the depository shares were purchased by the company in the quarter. That's a big number for a pretty big company, even like Alibaba. So boosting some of those bottom line numbers a little bit through some of that shareholder-friendly activity. From a trading standpoint, though, Jenny, I think this just comes down to you're going to have an opinion in a name like this. It can be a neutral opinion. It can be an opinion of, I don't want to trade this because there's too many unknowns. It can be whatever. But when it comes to this stock, as you said, it's seemingly been unable to break through meaningfully to the upside. But the worst of last year, where the stock was just down after down after down, it was a 2-year sell-off, seems to be over too. I don't know where it's going next, but we're looking at a bullish call calendar, sort of building on a strategy that we looked at pre-earnings where we looked for a move right to 100. We kind of got that. And then if you want a chance to reload as the stock's now 4% off that mark, here's a chance to look at that again. So what we're looking at is buying a call calendar, selling the September, buying the October. So not only are we in September options, we're potentially in October options at this point now, Jenny, on strategies that we look at here. 100 strike. $2 debit would be $200 in risk. If we look at the risk profile, it's going to be a mountaintop-like peak with some, kind of parabolic-like curvature to it here. It's not going to be as rigid as some of the iron butterflies or back ratio spreads. This one's a little bit more nuanced with the options across 2 different expiration cycles. But one thing that is consistent with this type of a strategy is a move towards the strike is really what you want to see happen. And so a move towards 100 is going to be our theoretical best case scenario. With this, it does have risk in both directions, as you can see there. It can, of course, move away from 100 to the downside. That will work against us. It can overshoot to the upside, too. So something to consider when looking at this style of trade. But it is a kind of aim small, miss small type of a stock strategy or option strategy that we talk about, in which it can be customized quite a bit. And in this case, we're risking $200 with a chance to potentially turn that into more in this illustration if that move towards 100 were to come to fruition, let's say over the next month or so.
I can't even acknowledge an October expiration because that to me seems like it should be light years away. But I also do want to point out Benchmark did raise give a buy rating and raise their price target to $180 a share. So it's like this name has the most discrepancies among those that cover it. I think you nailed it perfectly. You have to have a strong opinion one way or the other, of course. We will leave it there, though, for all things Alibaba. Now, coming up next, we will look at a bright spot in today's market. That is Palo Alto Networks with earnings next week, next Friday, actually. Caroline Woods will have that preview for us coming up next.
Thinkorswim by TD Ameritrade is more than a trading platform. It's an entire trading experience that pushes you to be even better and just might change how you trade forever. Because once you experience Thinkorswim by TD Ameritrade, there's no going back.
Oh, yeah, I'm going to take off.
Now, you downloaded the TD Ameritrade mobile app?
Yeah, actually, I'm taking one last look at my dashboard before we board.
And you have Thinkorswim mobile?
So I can finish analyzing the risk on this position?
You two are all set.
Choose the app that fits your investing style.
I'm Nicole Petalides, live on the floor of the New York Stock Exchange, empowering investors every single market day. Tune in to the TD Ameritrade Network.
Schwab Network's like no other financial media you've watched because it's all markets, all the time. It's 100% finance. We look at everything as traders and investors, and everything we say, everything we do is through that lens. There's no ulterior motive, and there's no subjectivity. There's no random guesswork about what we think. We are following the numbers all the time, relentlessly. We have the best CEO interviews, hands down. They're longer, more thorough, and tailored specifically to our audience. We never take our eye off the ball, which means we're always ahead of our peers.
Many option traders tend to focus on price and direction, but implied volatility can also be a big factor in options trades. In the Options for Volatility course, we explore what implied volatility is and how it can potentially affect the price of an option. For example, let's say an option trader wants to take a bearish position on a stock, but isn't sure whether to buy a put or sell a call. Both strategies are bearish, but looking beyond direction to consider the impact of implied volatility could help the trader choose between them. We also introduce strategies designed to harness changes in implied volatility. For instance, time spreads like counters and diagonals are designed to benefit from increases in implied volatility. Iron condors, on the other hand, are designed to benefit from falling implied volatility. After learning about the strategies, you can take the final assessment to test your knowledge. Head to the Education tab on Thinkorswim for the full Options for Volatility course and a whole lot more.
Welcome back to Next Trade Investing. It's time for a little discussion on Palo Alto Network. So we're just going full circle here now. We're not even looking at electric vehicles. We're not looking at names like Alibaba with ties to China. we're going to cybersecurity and Palo Alto Networks, one of the big players in this space. Big market
Look at
cap,
this SPY
66
chop, man.
billion
Wow.
or so.
No
Earnings are
mercy.
slated. I want to hope that this is like an error, but maybe it's not. A week from today, the 18th, after the close on Friday. So I hope our risk team
Look at
has
SPY,
their
man.
ears plugged.
That's
They don't want to
crazy.
hear that. But after market close on expiration Friday, not ideal.
Wow.
And like, why? To me, I just don't understand the reasoning behind it, because they're like they are going to be one of the only companies
Crappy.
reporting after the close Friday. I checked
Look
on
at
like
that.
multiple sources because I didn't believe my eyes, but that I believe is correct. So we do have their earnings event next week. This name, though, has been a nice performer this year. It's up almost 60%
wedging.
year to date. It has seen a modest pullback over the course of this month, down about 12.5%. It's now relatively unchanged on a week-to-date basis and down about 15.5% from its high. But we are expecting their adjusted earnings to come in around $1.28 per share on
That's
revenue
crazy.
around $1.96 billion. This would mark healthy growth on a top and bottom line basis for this company that has seen, I'd say it's been able to prove itself in navigating what has been a
I
difficult
think SPY could
environment for
rally,
some
yeah.
of these tech
I
players.
think it could.
They were
But
a
it's to break out.
banner
I
name
thought this was breaking
beginning
out,
of
but
2022,
still controlled.
when we saw some of these geopolitical headwinds
Mullen,
that
yep.
weigh on the overall market.
That
We
is a
saw
ticker.
so much interest pile into some of these cybersecurity names. Palo Alto Networks was a huge beneficiary. They since pulled back towards the end of 2022, but still have maintained a lot of this momentum into this year. We got a Goldman Sachs note actually yesterday that reiterated Palo Alto Networks as a buy rating. They said they see an improved setup into their earnings next week. They also have an Analyst Day event, another
Buy.
catalyst to keep on your radar. This name skews super positive among the analysts covering it. 43 analysts, there's 37 buys, 6 holds, and from what I could see, no bears. You have to double check me on that, because I think
I got the same.
Oh, good. Okay, great. So that just goes to show average price target right now at around $251 a share also implies about 15% upside. So the street has consistently liked this name. It's been named top picks across the board this year. What I like about Palo Alto Networks, though, Alex, is its consistency. It consistently delivers really strong top and bottom line growth, and it consistently sees, I'd say, relatively within the market maker moves in terms of their earnings reaction. So this name has been on a nice tear, pulling back this month, but its stability in the tech space is something I've always noticed.
Yeah, a lot of competition in this space now. You got players like Fortinet. You got players like Zscaler and CrowdStrike that are like your pure play sort of cybersecurity names like Palo Alto. But you also got like your hyperscale cloud players like Microsoft that are sort of in this space now too. Because of that increased competition, things that I'll be watching is, what does the billings growth of this company look like? When you have increased competition, kind of
It's
a
consolidation.
general,
Has to
macro
break.
theme lately of
Has to break the-
unwillingness to
break
spend
the trend.
a ton of money and sort of
Wedging.
a preference for shorter duration contracts. All of that is sort of putting pressure on how much new business this company is able to win. Deals are being
GNS reaching for
delayed.
new highs.
Product sales growth is going to be potentially hit by this as well, as this is sort of all working its way through. And so what do you do when you're trying to bolster growth and you're trying to get people to sign on the dotted line? Start offering some deals. What do deals tend to do? Discounts and weigh on your margins. So it's going to be a margin story. It's going to be a growth story, as it always is for companies like this. Cloud is such a high margin business, but even cloud has ebbs and flows of supply and demand. And at this point, it's just not the highest of demand industries right now.
Right. I mean, the cloud has ebbs and flows. Look at names like Microsoft or Amazon's cloud or Alibaba's cloud.
It doesn't have to break
I think that was
either,
once
but
seen as like the AI
I think
push
we'll probably
of,
get a break
like,
before
10
end of
years
day.
ago, but we have seen that area of tech be more inconsistent, frankly, as of late. Now, I will say they did ramp up their revenue growth to a pretty strong 25 to 26% growth on a year-over-year basis now for their fiscal year. So the stock has been, I'd say, pretty much nothing short of a gold mine for those who have a more long-term view in mind. It's tripled its value over the last half a decade. So again, consistent, but still operating in a space where we could see some holes and some major headwinds. Corporate spending is also one that's a concern. I mean, the fact that companies are pulling back, what does that mean for then their cybersecurity budgets? Because this is a more not frivolous aspect of corporate spending.
Frivolous.
But it's definitely one I think that we are seeing some scaling back on overall.
Yeah, I'm trying to get an idea here on sort of where
What's
they're
Joan
shaping
up
up
to today?
growth-wise with some of the competitors. Looks like Yeah, in
Goes
the
down
mid 20s%. For context, CrowdStrike's in the mid 30s.
Don't do it,
Fortinet
Joan.
also in the mid 30s.
Spies.
Zscaler also in the mid 30s.
Maybe
so
starting to
lagging
break to the
their
downside.
peers a little bit, but outperforming sort of your legacy names like a Cisco Systems, for example.
I mean, Cisco Systems, I'm like, that's like the dinosaur of cybersecurity.
But I mean, it can
You're not
pull all the way
quite,
down
but
here and still be in the
Palo Alto,
range.
Zscaler, some of these new names, they've been really interesting to watch over the
That's
better
what
half of the
sucks.
last several years. But
Gotta wait
we
for
will leave it there for all things Palo
a
Alto
lot of the move to be
Networks. We'll
done.
be watching that name, obviously, when they report
Unless you're just trying
after
to
the closing
buy
bell
lows and sell
Friday. We
highs.
don't know why, but we'll be keeping them on our radar.
But as the range,
now, coming up
as the day
next,
carries
we'll
on,
look at
that range
ticker
becomes
symbol
tighter and tighter. So
IONQ. I believe it's pronounced IONQ, but what I do know is this name is ripping higher on the session. George Tills will have more on that.
yeah, Ion Q. We looked at that. 18.5%. Well, all these easy, not easy, but favorable trading days this week. SPY market makers had to get it back somehow. Just one where we just chop in a range tighter and tighter all day. Meow. 10 minutes to 2 o'clock. Let's get a direction. Might be a pretty fun final 2 hours. Or just maybe 1 hour. Aye. Oi.
Which again are publicly
Wow, I'm
traded.
getting
They have
whipsawed. I
on
gotta
the computing
stop.
in the cloud.
Bad.
There is tremendous growth when it comes down to top line
Hold
sales.
my puts on this break. Hot calls up here. Bad, bad.
On a lot of the AI stocks, like Palantir, C3 AI, but we're also
Problem
seeing
with playing
quantum
breakouts,
computing.
you have
So
to
I think that's
have
part
tight
of
stops.
this reason we're seeing this huge run,
Because
year-to-date
you
run
maybe
up
just bought
in
the
quantum
best spot
computing
to
stocks
short,
alongside some of the
or
the
what short
software
and the best
side
time
of
to
the
buy.
artificial intelligence stocks. But
So playing a
let's take a
breakout
look at
doesn't
the
work, you
numbers.
just want
One
to
of the things
flip
to
it.
keep in mind is, first off, the company's not profitable. They came in with an adjusted loss of 22 cents, and that actually missed the estimate of 16 cents. But they did increase top-line sales, very small, 5.5 million versus the 4.9 million estimates. Now, if you look at the sales numbers, it's basically doubling its sales year over year, and that's a good sign. But you have to ask questions about whether or not this company has the ability to continue to generate those revenue growth, but also can they achieve scalability and effectively some visibility on earnings? Again, these are questions you have to ask. Now, I will say this, it's a very interesting technology. I'm not a scientist when it comes down to computing at all, or a computer engineer, but at the same time, you have to think about the demands for computational power. And I think quantum computing is another technology that you really have to consider looking at alongside artificial intelligence. I think they go hand in hand. Short interest in this stock is also quite high, about 18% of the free float. But there are some concerns you got to keep in mind, because one, the company's sales, if you annualize them, about 22 million, is low compared to the market cap, which is close to 3 billion. So it's trading around over 100 times sales, which is quite aggressive. It's still expected to lose money on a forward basis in the next 4 quarters. But at the same time, for every dollar of
47%
sales,
on liquor.
the company is effectively generating, they're losing about $4 in income. So, with the sales numbers,
Did that TD segment not
that's
spread?
going to help, of course, improve scalability. But the company's losing about $110 million a year, and you have to keep that in mind, which is not necessarily all that large compared to the current
23
market
likes
cap.
today.
George,
Coming up on
seems
2
like
o'clock.
This, AI boom,
You guys
this
are
AI
lazy
bubble,
on
this
your likes
meme-like
today.
activity, whatever you want to frame it as, has been a bit of a lifeboat for this company. It's one of these companies that came out via SPAC merger, the peak of speculation right before the market made its highs in September of 2021, and has been fighting an uphill battle since then. It was a $2 billion valuation when rates were at 0 and money was plentiful. Very different market environment now, but with the hype around AI, it's seemingly starting to work its way into that valuation just because of the business it's in.
It is. A couple of things to keep in mind. One, you could make the case that, yeah, obviously since May, and that May corresponds to NVIDIA's earnings, by the way, so that's why we saw a huge run up in a lot of these software AI-based names and even the quantum computing names in sympathy with NVIDIA. But at the same time, the company does have analyst coverage. That's important here and constructive. For instance, Needham has an $18 price target, Craig-Hallum a $21 price target. And I will say this, as I glanced over, one of the things you'll notice, if you weekly charts for trend,
No, Dink, don't hit it twice,
establishment,
please.
using a 10-week moving average, you'll notice that the stock is just continuing to trend above that 10-week
Didn't
moving
show you that was
average. So I
live
think that's
today?
an area, perhaps, that if you're investing in this, that it
I
could
sent a link out.
represent effectively an area
A
where
notification on
if it breaks
Discord and
closes on a
Twitter.
weekly basis below that
And if you have
10-week
notification
moving
bell turned on
average, that might
YouTube,
mean that
you should
the
get
at
it
least
3 times.
intermediate term run-up that we've seen is done. But I can't say if that's for sure, but nonetheless, the technicals look rather compelling
Weird.
here as well.
Yeah, and George, continuing to lose some steam here, even intraday, it was up. I mean, obviously much higher on the session, still almost 13%,
Over 3
but
hours?
just losing some of that strength we saw earlier today. But we will leave it there. Appreciate the breakdown as always, George Chelsea,
Push down what?
correspondent. Have a wonderful weekend, and that also does it for Alex and myself for Next Gen Investing
Hi.
for the week. Coming up next, we have the watch list with Nicole Pedalides.
Bad ladies. GNS moving up a bit. Radical, 8.5%. Nice close to the week, Rad. Way to go. GNS's borrow fee is at 106%. But it's been pretty much here for a few months. Started to tick up a little bit. Was at 90%. Starting to tick up a little bit with the stock price. A couple shares have come down some. All good things.
As traders and investors, and everything we say, everything we do is through that lens. There's no ulterior motive, and there's no subjectivity. There's no random guesswork about what we think. We are following the numbers all the time, relentlessly. We have the best CEO interviews, hands down. They're longer, more thorough, and tailored specifically to our audience. We never take our eye off the ball, which means we're always ahead of our peers.
That SPY bounces back up. There's got to be insider selling. What an awful IPO. GNS looking for the high again. $1.30. Hey Lords, why you sad? I don't know, Turtle.
Aren't familiar with. Yeah, there's more bad
Never
news,
heard that.
some fresh default fears out of China, which clearly are weighing on U.S.-listed Chinese stocks today. Just taking a look, Alibaba down 4%, Baidu down 4.6%, PDD Holdings down more than 4% today as well. Even Tencent off about 3.5%. This all comes after Country Garden, which is one of China's largest
130, we got a gap fill at 140, and then 150 is really the resistance.
Low around $1 Hong Kong dollar. That's
Here we
about
got
12,
double top or breakout.
Here in the U.S., so really penny stock territory. Country Garden warned it could be reporting a loss of $7.6 billion, or up to $7.6 billion in the first half of the year. That compares to a profit in the year-ago period.
New high there in GNS, $1.34.
Sales declines for this profit warning.
Guess I could put in some
Company also
ones.
missed 2 coupon payments on dollar bonds on Sunday, and Moody's downgraded its rating on Country Garden because of heightened liquidity and refinancing risk. So Country Garden has set up a special task force to find ways to turn the business around. There's
Task
talk that it's
force.
weighing various debt management measures, weighing a potential
145,
debt
150 or
restructuring.
so.
And, we're just definitely seeing the spillover happen, not just in the property
All right, SPY.
sector, but
Boy.
also in these
Gonna
U.S.
break out at the
listed shares
upside?
of Chinese companies as well. So some more bad news out of China, of course, comes just 2 years. We were talking about that earlier after Evergrande's debt issues and really just adding
Barbecue to 18.
concerns, not just about real estate, but
I picked
really
up some
about
barbecue
our
today,
overall
Lords.
sluggish post-COVID recovery.
I don't
here.
just have a
and that's the big
stubborn
picture,
bias
because
towards
so
it
much
going
of
to a
it is
certain
involved in
price.
it, and you're really not hearing anything great from their economic news. I mean, instead we're getting warnings from China, and you have curbed U.S.
Could have seen a
investment.
bottom.
And so some of those great names that
Depending on how
Alibaba,
today
for example,
closes.
after its earnings doing well, and all those names are lower, like you said.
I'd like to see it
Let's
break above
turn
here
our attention over to UBS,
next
because
week.
UBS shareholders are probably happy.
Give us a nice little
because
right shoulder.
UBS shares, meanwhile, are popping today,
or
up more than 5%.
a little false
This
break
after
like
the
we had
bank said
here.
it no longer required
Another
the
little
Swiss
inverse head and
government's
shoulders. I'll be
loss
closing
protection
out.
and liquidity backstop agreements. Said it
Hi,
ended
not
at
ready.
9 billion Swiss
Not
franc
ready.
loss
Wow, look
protection
at that.
agreement and 100 billion
How many
Swiss franc
hours of
publicly
consolidating?
liquidity
Since this morning,
backstop.
9:45.
These were put in place,
Almost
of course,
since
by
open.
the Swiss government
Look at
when
this.
it took over Credit Suisse back in March.
It's
Credit
been-
Suisse
literally
also
been all day.
fully repaid an emergency liquidity assistance plus loan of 50 billion Swiss francs it received from the Swiss National Bank back
Look
in
at
March.
that.
In a statement, the Swiss government said these measures, which were created under emergency law to preserve financial stability, will thus cease to exist, and the Confederation and taxpayers will no longer bear any risks
Big volume here on
arising
GNS
from
up there.
these guarantees. So that has meant
Buy
continued
still
gains
stuck in its
for
range.
UBS. As I said, shares up about a little bit more than 5% right now, adding to its year-to-date gains, now up about 25% so far in 2023.
Yeah, good news there overall, and these new, at least recent highs that we haven't seen in some time. Caroline Woods, thank you so much. Appreciate it. Now let's take a look at the bigger picture. Robert Shane's with us.
I would sell
Chief
GNS today,
Investment
but
Officer
I don't
at
know.
Blanky
The strength is
Shine
holding into a
Wealth
Friday.
Management. Thank
Might
you
just
for
keep
being with
going.
us, Robert. Your thoughts? We've gotten in a lot
Might
of
have a gap up on
inflation
Monday,
data
so
this
I'm just going to
week,
keep holding.
earnings. It's been mixed back
Feels like
and
a trim,
forth,
but
how are you feeling?
I don't know.
Well, markets, specifically the bond market.
This was like a
obviously lot of
Wednesday or
volatility the
something,
last
maybe?
couple of weeks. The
But
10-year
for
is
Friday?
something to take note of that we're seeing,
Crazy.
as well as corporate earnings. And let's just start with corporate earnings. Over 90% have reported for the second quarter 2023, and that was better than expected. The key takeaway
Macro?
is resiliency
Like, how big
in
a macro?
balance sheets, which is sort of the sigh of relief that the market was looking for. However, the bond market, the 10-year treasury now is
It's
above
5
the
breaks.
409 level. And what that's
Going for
telling
round
us
2.
is that interest rates could be moving higher in the foreseeable future.
Yeah, I see it right now, 416.
I mean, this will just get you.
Eyes as you see rates rising. I mean,
You have good entries.
I don't
This is
know.
no problem. You
When
can
you see the inflows
mitigate
into
with
bonds,
stop
everybody's
losses.
been putting their money to work there. I mean,
They're slow on
why
stuff.
not, right? I mean, what do you tell
Bad
folks when they're
entries.
trying to figure out what to do
Not super.
in this kind of environment, where to invest?
Disciplined stop losses.
Yeah, so on
This
the
will
short
just
term,
chop
we've
out
had
all
a
your
lot of
profits.
treasuries come due, so we're just rolling treasuries.
Buy,
and
swinging.
extending them out on the yield curve
Swinging.
as rates rise. We believe we've been anticipating, saying to clients all this year, we could see the 10-year go to 5%, sort of the
Wing and a hit.
4.93. Not to get too technical, but clearly the 10-year's telling us that the Federal Reserve potentially could raise, the 12th time, and that could be sort of the opportunity to extend on the yield curve. So, ultimately, if you have maturities coming due,
Wing
start
and a
looking
miss.
at some opportunities to extend on the yield curve, because you're getting 5-6% right now. And you want to lock that in, because who knows what 2024 is going to actually, hold on the horizon for the economy in corporate America.
Well, that's the whole
Swing and a
thing.
miss.
What do you think will drive this market? I mean,
Oh.
overall, I know you're watching inflation. Tell me more about investors and what they should be focusing on between now and the end of the year.
Again, this is not a set it and
Nirvana's
forget
up
it
6
market.
today?
In
Get outta
fact,
here.
if you saw last few months, since the July CPI report reading, which was the June reading, we saw a market shift. So if you just have an autopilot on your 401k or your retirement account, or even just your investment account, and you thought technology is going to take you, the next 6 months moving forward, you're not doing well as you could have, because it's all about rebalancing. By that I mean energy is now the leader, and it's providing a lot of value. If you look at the energy sector, over 100% of the stocks in the energy sector are above their 200-day moving average. Again, another technical sort of buying signal. So we've reallocated to energy. We still like technology, but it's one of those not, it's not a set it, forget it. It's being proactive and sort of pick and choose sectors that will be sort of the next leg up in the markets as markets sort of broaden out and play catch up as we're seeing.
Right. And in the big picture, I mean, when you think about equities, I mean, what do you tell folks
Wing and a
about equities?
miss.
I mentioned treasuries, and you talked about some of the investments people are making. We saw 206 billion inflows into treasuries, which obviously has been a record. What about equities? I mean, is there opportunity there when you're sort of putting a portfolio together, maybe for a
Still looking to fill that gap, maybe. We're down 5
Yeah, Nicole, there are a
now,
lot
6.
of opportunities out there, and a lot of the flows that you just pointed out in the treasuries are actually in the 20-year, believe it or not. They're not wrong right now. They're just early, but we believe later on, longer on the yield curve on the treasury market for sure. But specifically on equities, again, look at healthcare, look at financials, and then look at energy, because those sectors have to play catch up. So you want to broaden and rebalance your portfolio, make certain that you're being proactive. These are great markets. Companies that will win out, whether we hit a recession or not, are companies that have cash on the balance sheet that will work their way to basically top line and bottom line performance
5.5% on
in the
barbecue.
foreseeable future. So this is a great time to be proactive and pay attention.
Well,
This
GNS
is
looks a lot
great
better than this
opportunity
other
right
day.
now for the next 6-12
That's for
months.
sure. This day was crazy.
Is there anything that you might stay
How
away
solid
from?
this candle is. That's amazing.
Yeah, utilities aren't looking good.
Solid bodied candle.
And a few other, sectors right now where inside technology, the small caps
Buy
are
wants
going
to
to
burn more
weather
theta.
the storm not as great as large caps. Let's say if we do have a recession, the spectrum.
Keep
So
farming.
there are some spots where you want to pick and choose.
Keep the
So
farm
right
rolling.
now, utilities aren't looking so good. So I would just avoid that. And then look at markets that are trending and sectors that are trending positively in the short term, and look at that.
Yeah, how about abroad? I mean, our own Jeff Kleintop from Charles Schwab was talking about Europe and the inflation picture just being a better picture than here at home, because here at home we still have a housing issue where shelter is still very hot running, and that the European picture looked a little better when it came to that. He actually was talking about investing abroad.
We love it. There are, again, like everything, there are some opportunities in Europe, some great countries that have, some exposure to, we believe, that even though the dollar is sort of rising, it's been bouncing around this year, we believe the dollar could be falling once the Federal Reserve starts easing, let's say in 2024. If that happens, you're going to want to look at emerging markets. You're going to also want to look at international. So if you don't have international exposure for investors, put some international exposure in there. Broad diversification is always advisable, and then start legging in or dollar cost averaging as we see sort of the economics play out of sort of where the dollar goes. But there's a lot of, if you look at just the PE ratios, that's a very, in Europe in general, across the board, there are a lot of values to be had versus the S&P PE, which is like a 19.
Right, understood. Thank you so much. Robert Schein, Blanky Schein Wealth Management. Really appreciate it.
Have a great weekend.
Later this hour, we're going one-on-one with Xometry's CEO about their record revenue and why he's optimistic about the upcoming quarter. We're also taking some market technical.
Dude, the sound guy. What the heck?
And our panel taking a look.
This has got to
at
be
the
someone
cannabis
new.
market. We'll be right back.
Or he's just trying to get fired. No, he's cutting off Nicole. Dang, man. He's got like seniority there for sure. Guts is back. Everyone chill out. Don't worry, SPY didn't do anything but stay in its range. GNS did a little breakout candle there. See if it's going to get a follow through now. Got 145 next on the old GNSer. All started with the breakout of this trend right here. Daily engulfing. Well, actually, it happened this day, but then that day ended up getting shut down. This day, very nice. And then the break of this one. Now, I mean, the trend win right now is just not sustainable. But we'll see if this trend is sustainable. Like that. Or hops. GNS, almost a new high there. Eyes just burning theta. You're looking for a take profit today on GNS. Aggressive. Probably more something like that. I'd like that 145. Welcome back, welcome back, welcome back.
Here, you have to realize we've had a nice run so far.
Mace, doggy.
We're in August, which with the August, summer doldrums here. A lot of people on Wall Street taking off a little bit.
Maze?
Beautiful
Let's
weather
call
here
them maze.
in New York. But I do think right now the market really looks good. We had a nice run with tech, and everything kind of played out the way I was looking for it to so far this year. There are some stocks that I still think are
Mr.
value
Rogers
stocks here
music
that are
video?
very undervalued, and I've been touting, as you know, Disney a lot. I think it's really cheap here. And the other stock that I like right now is Nike. I think both these stocks are good pickups here over the
SPY.
summer, and I think by the end of the year they may be quite a bit higher.
I understand. All right, so let's get to some of the names that you are considering here. You were talking about Nike, and that Nike is looking cheap. Really? Tell me more.
Yeah, I mean,
what do you think?
Yeah, I mean, it has a low P. It really hasn't done that well since prior to COVID. China's been a big issue with Nike stock, but things seem to be appearing to be getting better overseas. And I think that this improvement in the China and global economy should definitely help the stock. The stock is trading off of a 40% all-time high in 2021. And, you know, their improvement in inventories and their online business, I think, could really help Disney. I mean, Nike here, I'm sorry. And I think that this stock could move quite a bit. I'm looking for it to move 20% in the next couple of quarters.
I see. And in the meantime, when you talk about Disney, you said this one is a favorite of yours. What is it about Disney that is jumping out at you right now?
Well, Disney made a run a little bit earlier in the year, and then it made a pullback, and then it right now some pretty good
GNS
news.
new high.
I mean, they just had earnings.
136.
Bob Iger is cutting costs here.
137.
And it looks like
up 68%.
They're increasing their pricing in the streaming. The U.S. parks could improve. The international parks are doing well. But I do like this deal here with ESPN and the gaming. This could be very lucrative for them. And I don't know. It looks like maybe Bob Iger spends off some of the divisions in Disney.
All right, SPY going for another swing.
Here. There was talk of a takeover possibly by Apple. But there could be some future consolidation in the industry going forward. And I wouldn't be surprised if different 2 or 3 years.
We're gonna hit.
Yeah. Did you have any runner-ups that you also were looking at but didn't mention because you're still working?
I think so. I think it's a hit.
Well, when I look at some things, I mean,
volume too.
Very
it's a hit
to me here. I do think that it could make a nice run. It's been trading, pretty much on the 52-week low. Made a nice little run, pulled back here, but I think there's some money going into 3M as well. So I look at some of these value stocks after we've seen a run in the market, and typically
143 there on GNS.
Should do very well, in my opinion. Throughout the rest of the year.
Yeah, understood. I was just talking with an earlier guest talking about the record inflow we've seen into treasuries, and obviously people
got
have been
145 area for resistance. Actually, that gap's filled now, huh?
What are your thoughts on how someone should put a portfolio together, either near term or long term?
145 and then I guess 152.
Well, I think right now, obviously I always recommend a diversified portfolio. But we've had a big run
volume
so far
today.
in growth, and,
what's the volume today?
The value stocks have lagged a little bit here.
44 million.
It was the opposite the year before, but right now it looks like the international markets may look like they may
is this
do
a
better.
false breakout?
I would recommend a portion in international.
You would.
But I think a nice diversified portfolio is the way to go, and when certain sectors get cheap, that's where we look to do some buying.
We've been waiting for this dip by in
now,
GNS for like months.
These value
and then I went in
stocks
small.
Cheap, and like I said, I love
funny.
the growth stocks like
Meta
and Amazon.
I went in small because of when I bought it. It was on a huge day already.
You got to rotate a little here.
I need to average, but I just didn't.
I do think there's room to go.
But yeah, we've been watching
sector,
it, waiting for an entry for a long time.
Do look pretty good here.
Swing and a miss on SPY.
So it does look good here. That's a good feeling too. So there's still some room to the upside.
Waiting for that gap fill. Finally got filled.
Nike, Disney,
this support
3M,
50
you're watching
cents.
As well. Andrew Aarons, great to see you. Synergy Advisory Management Group. Thank you, Andrew.
This play's been a long time coming.
Coming up next, Xometry's CEO joining us to talk live about record revenue and what's already fueling this strong growth for the current quarter. Coming up.
What is that thing? SPY. Alright, GNS at 143. RAD's up 7.3. Top. It's coming down to VWAP. Down 8. Run is down 1. Still think that's holding this horizontal support. T woke up. We've been having crazy swings. GNS not giving it up. Alright, SPY. It was a swing and a hit. To get a little more liquidity, and now you can rip. Never mind. Wait till power hour. Nice guts, well done, man. Over 100%, that's dope. $450. I don't even know if we're gonna go back to the bottom of the range. This is kind of a breakout here. It's above this trend. I should probably take profits also. Things up 70%. Hitting at a known resistance. What is wrong with me? I'm gonna trim half at least. Or a couple hundred, I don't know. There you go, SPY. We're gonna hit. I do want back in though. Alright, it was a hit on SPY. Not waiting for power hour. Going back for the high of the day. Breakout. GNS is bull flagging up here actually. And we still have an hour and a half left. I'd see a little blow off the top before some profit taking end of day. Off the top to 152. There you go, SPY. There you go, boy. Make me sit through that chop for hours. All day, pretty much. We're still, look, we're still fighting that resistance up here. The theta burn. It's melting. Stop Tendy Town. You just sold and now you're telling me not to do it? The heck kind of advice is that? 230 plus or minus 10 minutes. 230 plus or minus 4 hours. Yeah, you get movements on hours sometimes on half hours. Could be institutions buying, I don't know. Usually the last hour because GNS closes. Get your so-called power hour. Market makers doing their thing. People buying or selling on the close. Guts, why would you tell me that? Get your poison out of me, Satan. Guts. Selling more because you said that.
Outside of Michigan, they may have some spare capacity because the automotive market isn't going well. Now they can get parts from an aerospace company in California that's looking for somebody. Or if you're oil and gas in Texas, a manufacturer, you can get parts and orders from a medical device company in Boston. So we're powering American manufacturing at At the same time, we're making it easier for customers to buy their parts
Since I
and
am exiting
strengthen
today,
their supply chains.
makes sense to have
Yeah,
some.
and I mean, the truth of the matter, nobody would know better than you.
Look at
but
all those.
Tell me more about the supply chain issues we used to
Wow.
have, but versus now. I mean, would you say
I have to look through this
we're
update on
back
Webull.
to pre-everything, or there's still some bumps along the road? And you mentioned automotive and medical, and I know you have GE and Dell, and there's a lot of names that, you know, NASA. In this digital marketplace, these kinds of buyers. But how is the supply chain working, in your opinion?
Yeah, so look, there is a lot of focus,
Parallel,
particularly in the United
polyline,
States, about
rectangle, pitchfork.
reshoring
You know?
and ensuring that irrespective of whatever macro events happen, whether it's a black swan event like COVID,
Ooh, that is
or
neat.
sort of geopolitical issues or climate-related
Oh.
issues, that American companies can deliver their goods to their customers. And so that's dependent on building a strong manufacturing base right here in the United States. Now, the
Is
good
it
news
snapping
is
to a
that there are
spot?
hundreds of thousands of small American
What?
manufacturers to make those parts. But it's
That
difficult
is
for a customer to
sick.
find that right manufacturer. Even
It
large
is.
companies, some of the names that you mentioned,
Oh
struggle
my
to find
gosh.
the best
That
manufacturer
is
for
so
those parts.
nice.
So in their efforts to
Literally everything I'm
reshore,
doing right here.
in their efforts to strengthen the
I'll just
supply
delete
chains,
mine.
using technology, using AI, enables them to find that right manufacturer and
Look
ensure
at
they can
that.
deliver their goods and do it right here in the United States.
That's awesome.
I mean, at this point, innovation for every company is a big deal. I mean, even for your own, I'm sure you work on
I'm gonna make
innovation
so much
in
money
some way,
now.
shape, or form to make things go where they're supposed to go. But tell me about the innovation and how it's helped your company
We're gonna
from
be
the
filthy
outside in,
rich
and maybe
because of
on
Webull.
working on it the inside out.
Yeah, so in terms of for our customers, you know, we're really at
That
the
is
forefront
pretty
of the
incredible.
next generation of hardware, of machines.
If you guys are
So
interested in
if
such
it's
a
electric
device,
vehicles, if it's aerospace,
feel free to use
if
my
it's
Webull
new
link in the
emerging
description.
medical devices,
Oh, that's pretty
you know,
cool.
businesses that are focused
I
on
like that
smart
a lot.
agriculture for combating climate change, all these
Dude.
different new technologies and verticals that are requiring innovation and
Like,
manufacturing. You know,
glorious. Wow. I don't even understand how it works. That is sick. The trend channel, yeah, that just updated Webull this morning. So we had like these lines, like I don't think this whole even category was here. Maybe it was here actually. I've never seen trend channel, data and price range. And there's some pretty cool stuff here. What is this telling you? Oh, that's pretty nice. Look at that. Hold on, GNS. Hold on. Eye ripping there. I mean, now I'm all confused. This trend channel really changed everything. I can just draw it automatically. Is this AI?
are you
Am I in the future?
using AI to make that
AI,
price
you
for
said
them?
AI.
And like that AI,
Go by barbecue.
to create the prices for the manufacturers too, and to optimize that match. So in a business like ours, when you're asking whether it's real, where there's millions of permutations, AI enables us to unlock that. And by unlocking that with AI, we're making it easier for people to innovate. You're talking about innovation to get their products to market. And we're also strengthening the supply chain right here in the United
Eye
States.
ripping.
So
Look
AI
how
is
automatically
very real,
it continues to
very
adjust.
powerful
Wow.
in manufacturing, and it's very powerful in this logistics end to enable people to buy, you know, in this giant market of custom
Crazy.
manufacturing.
Yeah, thank you so much, Randy Altschuler. I really appreciate it.
Well, I mean,
CEO of Xometry.
theoretically,
Thanks
you would
again.
just
Still
sell
ahead,
on the break of
second
this.
half of our show, we're taking a look at
If you want it to be
major
tighter,
change to some market technicals, the role of Magnificent
you just make
Seven
this shorter and
going
it'll give you
forward,
a
and potential in the so-called forgotten 493.
more
Let's
aggressive.
look at that. As we had a break, take a look at
That
winners
is
and losers in
insane.
the S&P 500.
Super cool. then this other one's cool, date and price range. I usually use just the fib levels to figure out percentages, but this is way nicer. It's not giving me all that other stuff. 32%. It's 1 hour and 15 minutes. It tells you the volume in there. Wow. Wow, wow, wow. Yeah, it automatically adjusts. You can see it adjusting. Whichever side it's pushing on, it's adjusting. So I guess that wouldn't, well, maybe I could probably change it. There's probably all sorts of settings. Upper deviation, lower deviation, left extend, right extend. Oh yeah, that's pretty cool. Extend them. Huh. Guess it wouldn't really give you an exit because it's going to be adjusting. Is that right? I'm getting so distracted. I had spy calls. I just sold some. Dang it. I'll wait. 2:30. Variant. I'm not sure how that works with the adjusting going on. I know, usually I don't update. I just saw a bunch of stuff, a bunch of words this morning for the update, and I was like, I'm not gonna read through that, let me just do it. I'm usually pretty slow to update. But, yeah, I'm getting all thrown off now. What's going on? What was that? Huh. It's moving it, so that's kind of interesting. Gives you kind of like a mid. Wow, SPY just pumped and dumped there. What the heck? Breakout? Come on. Dude, the market today is not leaving any prisoners. Holding no quarter. Get rid of this thing for a little bit. I'll wrap my head around what's going on. That's maybe been there for a bit. I don't even know. Oh yeah, this is actually really nice. I've been wanting to get this. Tells you your risk to reward. Oh yeah, I'm gonna have to mess with this. Shows you where your stop should be for your risk to reward. How it even says for your account position, your account percentage. Oh my gosh. I have to do it when it's not stuff going on. Now I'm like just so lost. I think this is okay on GNS. Yeah, I like that. Pitchfork. Oh. Oh yeah, I've seen this before. Angle. Yeah, I think some of those are new. That's awesome. I think I'll like that trend channel. Oh, it's just giving you deviations from the center line. All right. Yeah. Upper deviation. Yeah, so that's how this... Okay, that makes sense, I think. That's how it keeps moving, because it's based on the center line. I might have to do a video on all this stuff. Now, why is it so tight on SPY there? Was cool. It's just showing you the standard, not a standard deviation. It's just its own, I think, metric for deviation. That makes sense. Oh, look at the SPY just trapping everybody. Put that on every trade. The risk to reward. Yeah, I know. I wanted to start using it. So I'm glad that's on here. I'm going to familiarize myself. I was going to start looking at.
Filed.
Yeah, that's
and
great.
We do know that right now the CBOE BZX exchange
People
also
keeps
did
pretty
file
active on
with the SEC
updating
for a
with
rule change in
keeping
April
up with
that
other
would allow
brokerages.
listing of this ARC21 spot Bitcoin
pretty impressive,
fund.
really.
The filing has since been amended several times and now includes this surveillance sharing provision that was introduced actually in BlackRock's filing for a Bitcoin fund. The SEC, though, this is not
Basically
the first
burned all
time
my
we've
premium
seen it
down here
reject
through that
one of
chop.
these applications. They've actually rejected a
Calls are
dozen
hardly
other
even up, and I bought 'em
applications
here.
for a spot Bitcoin
Or here.
ETF. We did see SEC Chair Gary Gensler here leading the crackdown in the crypto space, giving some pretty negative comments regarding the entire space, not just Bitcoin. But there have been signs of some shifting momentum in the overall crypto industry. Partially, I would say, leading this legal victory for
Dude,
Ripple
it's so
that
fast. That's
was
sick.
casting a doubt on a lot of these SEC efforts. This is an ongoing story. Bitcoin futures, as you can see, they're down about 0.3% today. But really interesting to see those that are arguing for the regulation, of course, those that prefer this space to be a little bit more deregulated.
And you know, this lineup
Wow.
that they're petitioning the SEC to have these ETFs go forward. I mean, when we heard the news of BlackRock coming forward with one, that gave a boost to Bitcoin pretty quickly, and that lasted for some time. And
Almost
right
threw
now
me
we've
off. I
been
almost
sort of
started selling all
stuck
my GNS
around
shares.
this
I know what's
area,
going on.
just under 30,000. So we'll see what the next catalyst is. Thank you so, especially as it's being pushed
Dude, what
off.
is happening
Jenny
with
Horn,
SPY
thank you so
though?
much
Look
for
at
that.
those wicks.
Appreciate it. A hot
It's a
topic,
mess.
crypto. Appreciate it. All right. Let's welcome in our next guest. We're taking a look here at the markets right
gonna
now.
sell those calls.
Todd Walsh, CEO, Alpha Cubed Investments. Thank you so
I need
much
to
for
hold.
being here.
Thanks for having me,
I
Nicole.
don't
It's
know.
always a thrill to be here on the NYSE floor.
It is. It's fun. I've been here for decades, and I still love it. I think it has a little bit of everything that we need to know what's going on in this market. And in the meantime, you do a lot of technical analysis. Right now, I just finished saying that this could be a down month for the S&P and the NASDAQ to snap a 5-month win streak. What is when you think about the technicals, you could break it down as you wish, but what do you think?
Well, the technicals are like our guiding stars. So remember last year I was sitting here right with you at almost the bottom of the market. We had a pretty positive message at that point, and it played out that way. We had a cyclical growth slowdown. You know, people think of consolidations as being completely sideways. They typically have really scary volatility.
Trading View, yeah, I think
And we've had a
GD
big
has
move
it
this
too.
year.
And
Nobody knows what to do.
Thinkorswim.
People were mostly set
Or not
up for a tough
Thinkorswim,
year for the first
Tasty
6
Works.
months of the year, and now people feel like they've missed out. They've got to chase. But I come with another positive
Yeah, that's what I'm saying. Like, we will
we
trying to
follow
keep
a
up
lot
with
of technical indicators.
really
of the
Trading
firm.
View.
Alpha
Like,
Cubed Investments,
done a
we
lot of
combine
stuff that Trading View
fundamental
has.
analysis with technical analysis.
But other brokerages
And
too
right
that
now we've got a
haven't really
positive
kept up with
technical
charting.
condition on the market. Doesn't mean the
I mean,
market's
there should
gonna
be
go
no
straight
reason
up,
why you
but
shouldn't.
it's a much
Why you
better
should start using a
environment than
separate
last year.
program for charting that your brokerage
Makes
is
it
on.
a positive technical condition for the market.
And
What
Weeple
tells
sees
us
that and
This
adds
confusing
pretty much
chart
everything
that
that's
we
on
have
Trading
up on
View.
the screen right now illustrates
Yeah, there's still some
of the
people that
30
just
or
use
so
Trading View
technical
to chart
indicators we
because
look at. We
it
look
has
at
so much.
monthly bars. This is on the S&P 500. And you see last year they were diving under some of the indicators that you see. I'm not going to go into them in too much detail, but when they all go under, think of it like your board of directors is all saying, trouble, trouble, trouble. You've got to get cyclical, you've got to get
43,
defensive, maybe get some dividends in there, and maybe even marginally raise some cash. But that condition all changed within the last 3 or 4 months. All of these indicators that we're displaying here
I'll let it go
raised
without
their
me.
hand like your board of directors and said, we're in a positive technical environment. Shift your thinking. So instead of being defensive, instead of being in non-cyclicals, use dips to add to your portfolio and consider yourself in an intermediate to longer term bear market. But again, it's not going to go straight up. Yeah. We can still expect those 5 to 10% dips for all the reasons we already know.
Right. Buy the dips. Wow. I mean, you know,
I hate to sound like a perma-bull. I'm not.
No, but look,
when
I mean, it's a big deal because there's some people who are still forecasting recession either this year or next year. But for right now, those technical indicators are telling you. So you said it also said time to buy cyclicals, like you said.
Yes. So we've got recession fears, Fed watch, inflation watch. We've got a slow-moving CRE time bomb. Everybody knows all that. We use technical analysis to filter out the negative inputs. We're in what I would call one of the most hated bull markets of all time, but there's always things to be afraid of. And this technical analysis helps us filter that out and get on cycle with the market.
And then you have the AI cap-weighted index. You have the graph for that, and these are the names that we recognize very easily, right?
Yes, we call them the Magnificent Seven, as other people have called them. And at this point, they've gone through the roof, right? They're carrying the majority of returns on the market. Their forward PE on the Magnificent Seven or the AI ecosystem stocks is about 37 times forward earnings. Does anybody think that's reasonable? We should be diving in at this point.
Exactly.
But like the PC revolution in 1977, like the internet revolution in 1991 or 2, we think this could represent a secular change in the market going forward. It's not going to go straight up. These valuations are too high, but in a positive technical condition for the market, you've got to look at what's driving the market around these names and others and use weakness to add to them.
It's interesting how you put, sorry, I didn't mean to interrupt you.
Well, the rest of the market, we call it the forgotten 493. 493 companies have basically radically underperformed the market, and we've seen a broadening out there as we've entered this positive technical condition. So there's still a lot of value there, and investors should be focusing on where there's value. And as we consolidate these huge gains in the Magnificent Seven AI ecosystem, add marginally to those names as you can in difficult markets, which we're still going to have.
So look at those other names, because to your
this
point,
is, I think this middle line is basically the median price in this time frame.
Is
that what I'm seeing?
32, right, times future earnings. I'm looking at
well
your
over
chart.
30, yeah.
I'm looking at your chart here, and the weighted average, the bottom 493 is basically 17.
It's about 17,
I'm rounding.
yeah.
Okay, so. But if you look at a name like NVIDIA, right, I'm just using your chart here, but I know that NVIDIA has been up 200%. It's almost 50.
Yeah.
Tesla's 63 in forward PE.
Barbecue, 7.5, nice.
When you think about with 16 or something.
I gotta keep an eye on GNS though. I'll pop back to barbecue.
Normal, right?
NVIDIA is the poster child for the AI ecosystem. Yeah. They kind of have a monopoly on the GPUs that are driving that whole sector. It's a real phenomenon, and they are benefiting from it, but at a certain point, trees don't grow to the sky. Yeah. Generally, it might make sense to do a little trimming on a stock that's trading at, over 20 times sales and over 30 times or 60 times forward earnings.
How to use
but
this
there are other
indicator.
sectors and other names in that sector that may be a little bit more viable. NVIDIA is the one we always go to because the valuations are absolutely insane. Right. But it's the core of that sector. So
I've seen that. You can link that.
Continue to maintain a core position there if you already have it.
Right on the chart, yeah.
I love how you do this balance.
Yeah, I mean, Webull offers that too.
And fundamental analysis,
a lot of them offer that, trading from the chart. All right, I'm selling the rest of my GNS. I don't quite know. I'm trying to, it's moving this down. I think that's bad.
Some of them.
The S&P 500, some of them.
It's not a rigid, like, it's not support and resistance. That's what it's not.
Wild cards that
it's like a deviation.
Inflation, recession. I mean, we talked a little bit about
trend
recession.
Channel.
But what do we need to know for the next
though.
6, 12, 18 months? What do you think about?
The thing that we
That's weird.
focus on is
All right, I
we've got
sold
to
the rest.
slow things down and keep it simple.
Have
You
fun
know,
in
if you go
Valhalla
back
without me, guys.
to when I started in 1986 and I
Spies
trained
coming
on
up
this
more.
for a crazy long time
Spy's gonna
frame,
make high of the day. I
there's
just
always been something really
didn't
serious
like
to
all
worry
that.
about. We just had the regional banking crisis.
There you go,
Pretty
9 1/4
serious.
on
We
barbecue.
just had the debt ceiling crisis. Seemed pretty serious at the time. We just had our debt downgraded.
Yeah.
We're going to continue to have curveballs thrown at our head, but as long as these positive technical conditions persist, and they tend to last 1 to 5 years, use the volatility to marginally increase your exposure to the market within the framework of your overall financial
Kind of at
plan
that
and
next
goals.
resistance
Don't get crazy here.
there on barbecue.
But don't, the takeaway is don't look in the rearview mirror. Everyone's stuck in 2022. It's 2023. The markets are looking through these events for a reason, and it's an important reason.
Yeah, it's good to see you. Thank you
Great
for
to see
being
you, too.
here.
Thanks for
Yeah,
having me
thank
on.
you
Always
so
great to
much.
see you.
Todd Walsh.
He's looking
glad
better
you're
than
here,
the
CEO
last
Alpha
false breakout
Cubed
barbecue had.
Investments. Thank you, Todd.
This one, this
All
head
right.
and shoulders that end
Coming
up
up
setting
next, we're going
up.
to
But
be
we'll see.
talking
I
all
want to see it
about
hold support above
cannabis.
this
I was
trend.
just looking at YOLO
Above this line.
and MSOS, and those charts are terrible. What about Aurora? Well, we're going to talk about Aurora, ACB, after its earnings coming up.
This might have one more push. I don't know. Held up really well for Friday. No significant action. Not on barbecue. I mean, yeah. It looks like it's hit a bottom. But to me, it needs to be, for it to be confirmed, it needs to have build a shoulder over here. This breakout. The other side of this resistance. You have your inverse head and shoulders. Not before that, like, and we'll see if it trades around here and then just trades sideways, then that will be your break. So yeah, it's looking good. But yeah, I mean, it has to do that still though. Not use this as resistance. Keep coming down. Spiders are crawling over barbecue TA. Oh no! Not the spiders. Sorry, I don't get that reference. It's up 7-7. A little confused by this. Oh. So if I was gonna buy here, what is this thing set up at? Risk 25%. Oh, this is for the account? The whole account? One? Oh, sorry, that was me. Oh, there we go. I want like a 3-to-1 risk to reward. Oh, GNS flushing there. I'll be coming back to VWAP. That's pretty sick. I open there. Be my stop. Maybe I take profit. Yeah, I like this. Maybe for like a spot to trim it. But this just, I want to limit profits. Do that. You know what I mean? Like I want to take profits on some, but I want runners so I can turn the risk to reward to, you know, way higher if it's going to keep going. So maybe taking some initial profits. We're going to use these charts. It's crazy how it tells you your account and stuff with it too. That's incredible. Oh, is it snapping? That is nice though, because I don't always, I'd have to chart it on the options though. This is just for shares, so I'd have to put the, which I can do that, I can put the options on here, and then that'll be nice for giving me stop losses on the options price. I've been doing like 10% of my entry for a stop loss, which can always, I mean, I don't know. Only good thing is that it rejected on earlier support. Barbecue, I mean it. So, to me, the good thing is, yeah, I found support, but every day it found support, then it falls through. To me, it's good that it broke out of this resistance. Breaking resistance is what I want to see. So it broke this little resistance, and now there's this resistance that it needs to break. Let me chart, let me trend channel that for you. That's kind of showing the, yeah, the median price, I think. Yeah, because you can't, that's stuck. I can't move it like up or down, so it's, that is what it's showing. That's crazy. That's based on the support and resistance though. Right, it has to be. Well, I guess it doesn't have to be. It's just based on the median price. Huh. That's super cool to play with. Good chunk of money last few days. I've had more success on SPY day trades.
I think it's a 90-year-old agricultural company.
Or are you talking about something specific?
We saw the same thing
in GNS I made alright, but
they
I didn't have a huge
did
position.
$85 million acquisition from Budweiser of craft breweries. I think they're now the 5th.
But yeah, I mean, I was up.
They're a cannabis company, but they're the 5th
70%
largest
on those, 80%.
craft brewery company in the U.S. now. So they're jumping into that space as well to try to diversify revenues and profits.
Yeah, and it makes sense because you can't have all your eggs in one basket. I mean, we all know that.
Is that an actual standard deviation?
At this point, do names like that, some of these other names like Tilray that have been expanding, I mean, even Aurora, which has moved in and bought and made an acquisition, but some of these names that seem to be expanding into other businesses as well and not trying to stay only on cannabis. I mean, to the point that you both made,
always has a downtrend channel before it pops up again.
You know, when you read the headline, strong quarter from Aurora, but the truth of the matter is they're burning through a lot of cash, and that's problematic for folks who like to look at a balance sheet and look at it over time.
Last time we kind of did a rounding bottom because we had a cup
or any of these ETFs like YOLO or MSOS or anything like that.
But yeah, once so on this one you can kind of see
well, I manage
the break
MSOS
of this,
and YOLO, and so
either
I'm
up there or you
obviously
can
a fan.
do more on the bodies.
YOLO is the global
had a resistance and it broke their resistance and then it started the uptrend.
Canadian, even Israeli companies.
So I'm looking
and
for
MSOS
these lines over here.
U.S. exposure. I think it's really important for investors to understand the difference between a Canadian company and a U.S. company.
Big cup.
Aurora was a big name, and I'm
Since
happy you're having us on the show today to talk about it. We both said avoid Aurora. Tilray is going to be a survivor. They're scratching and
this next resistance though that it's hitting on right now.
To get into the United States.
Isn't great.
While
I still coming up there. I just
all of us are waiting for U.S.
want all those calls any longer.
But a lot of people, they hear something about cannabis reform coming. They invest in cannabis blindly without understanding that Tilray can't sell any THC marijuana products in the United States. Neither can Aurora. Neither can any of these other Canadian companies. But you know, we
RAD
have some in our fund.
Steady 7.7.
YOLO, some that we like, but we think the real opportunities are on the U.S. side of the border.
Guaranteed by now.
Waiting on federal reform. Our largest holding is called Green Thumb
Baby
Industries.
steps to mega
GTI.
yacht.
We have large exposure there. They're a multi-state operator in the United States, and they operate frugally and profitably.
Okay. All right. GTBIF, I see it right there, and I see what you're saying about U.S. versus Canada, and you said that ACB, hard avoid in the ETFs that you manage. And then final quick thought, Andrew.
Yeah, I agree with that. And actually, last time I was on the show, I actually mentioned
3 minutes
Tilray
power
as
hour.
a pick. I think, they are scrappy, do whatever they can do. They have a sizable cash position. They are growing operating cash flow. And at some point, our markets, our federal walls will open up. 8 out of 10 Americans want legal medical cannabis. We just had our 23rd state go full rec, so we went from 0 10 years ago. We're halfway there. I think we'll see that number grow to 30 and 35.
Dan Aaron's Advisor Shares, Andrew Hunziker, Dope, CFO Certified Advisors. Thank you both for being here. Really appreciate it. Good luck there. That's going to do it from us here on the watch list. I'm Nicole Petalides. Thanks for being with me every single weekday, 11 a.m. and 2 p.m. Market on Close is next.
You mess with this risk to reward. Let's see. Fixed range volume profile. Oh, that's kind of cool. We can draw a little chart for it instead of just turning on the whole VP. Huh. This line showing the most volume. Excuse me. So I put that where I'm buying in. I do it like that. Yeah, that's nice. I set defaults. Entry price has stop. Oh, 25%. This is for the account though. On options. Good, right? I want this to default to 3-to-1. So if I was getting calls, that's pretty nifty. And 3-to-1. There, that's where my stop would be there, 36 cents. And then take profit would be there. This might make me better about taking profits. I don't know, with SPY I've just been just using TA. Just kind of selling into strength. And just trimming, like scaling out. Got back in some Teladoc calls. Dang man, Teladoc is kind of lame. Hopefully it bounces on that. It'll probably fill that gap. It's not looking great though. Yeah, follow GME, sure. Yep, low volume record. Understand how I give him. So the low volume record is relative to the split. It's not actually. If you're not, you know what I mean. So when we got the 4-to-1 split, our volume 4x'd. We're not getting. So today, let's say yesterday was 2 million volume. Before the split, we would get days, a lot of days less than 1 million. It's 4x. They're maybe the lowest volume. but they're not, yeah, the lowest volume still, but they're not actually lower if you didn't split. I don't know. You understand what I mean? It split just like the stock price, just like everything. Yeah, I could see it help take them with some profits. I like that it's quick to see what my stop price would be. Like I said, I've just been kind of putting in percentages and or just watching the chart, and then once it breaks a certain support or resistance or whatever, then closing it. Sometimes you get little false breaks, so I don't want to have one on the order book, but I just manually do it. But this should make it a little quicker. I'm going for a 3-to-1. Pause beta. So SPY, yeah, I mean, yeah, it does follow it, but it doesn't always. Like this is the mega caps, the Magnificent Seven or whatever. It follows it when SPY is like squeezing, and that's when R2K is ripping. And if you look at IWM, it tracks that, of course, much closer because it's in that. It's still, yeah, it doesn't just follow it basically. Like it can, but it's gonna have a bend, a bias rather. So if it's time to rip, I mean, it has been following it. Like, I mean, it has been. Look at this top. Look at this. So if it was time for it to rally, it would just move up much bigger on the SPY up moves and move down much smaller on the down moves. And that's where like it'll kind of follow it. But the volume's so low that it's kind of there's no conviction in its price action basically. It's not like there's all this volume trade here, and this is really where the price is fair, where buyers and sellers agree, because it's such low volume that it's once volume starts pouring in, you're going to see, you know, you should see big volatility. So without that, it'll just kind of drift around and be sporadic. But yeah, GME's changed a lot in the last year, really since the split. From what I can tell, looks like we're sometime around here. I think it's either time-wise, well, not time-wise, but sometime around the split. It seems like they've fully gotten out of their obligations to cyclically run GME, or it's just everything under $30 is safe, or some price. It might not be 30. So far, it seems like it's still been 30. Because they haven't let it get over 30, and when it did get over 30 last time, even after when I think the cycles ended, it did go crazy. It went parabolic, as S3 Partners or whoever that guy was said. So it could still be a price point that it has to get over for it to become a margin risk or whatever happens when it gets volatile, or not, or it's just totally done with its inches. And because the cycle's definitely, it's been over. I mean, we've been it's been a year since we've seen a cyclical pinch. So to me that just looks like they've unwound whatever obligations they had to continue to pump and dump it. And I mean, it's been 2 years of it, so you know, whatever position they were in, each one of these liquidity pumps, they were able to release some of their obligation. That's my thought. But again, over 30 bucks, like maybe that's all changed. Last August SPY peaked and GME's at $50 with it. Oh, last August? Right here. A year ago. Yeah, that was right around the time. That's what I'm saying. I think it was above $30 for one. This was right around the split, so I think this was the final kind of unwind. And then we saw it once here, but I think that was just because it was over $30. I mean, dude, this thing consolidated, or I guess consolidated. Just 4 months? No, 3 months? Just like tight range. We're doing the same thing again, it's just a bigger range. And now that we've broken this support, I think probably come down here and test 18 and maybe back to 15. So yeah, I mean that also shows the point how it's just not moving the same. You pointed out a year ago, SPY was here, and GME was up there. So there you go. Barbecue. I don't know. I'm just looking at the technicals. This morning it kind of broke out of that resistance, and there you go, 25 cents. It's like, why is it ripping? Why has it been dropping the last month, 3 weeks, whatever this has been? Yeah, it's been a month. Been almost a month since that 40-cent high. There's a balance. Equilibrium, 25 cents. Yeah, I want to see it hold above here into Friday would be sweetness. Eyes coming down to VWAP. Jeez, it's just trapping people everywhere. Gosh. Go touch your grass, Jay. Fly back down to VWAP. Ice cream rally divergence. Yeah, trades, but I mean, I think that's the whole stock market where they're internalizing shares or orders, and our orders aren't going to any lit exchange. So I don't think GME is special in that. Oh yeah, there you go. Barbecue 25.40, 11.89, 11.89%. Or rolled in 2 years. Yeah, this could be it. It could be a longer 2 years type cycle. Thanks, right? I mean, I know I don't really look at GME pre-January sneeze. So I know other people that have charted back there said this is some longer cycle, so it could be. Yeah, I think it could turn back on. Well, I mean, I guess if it's over $30, that's because when it did all of its pinches, it was over $30, right? So that's kind of, maybe that's what we need. Just holding over $30, we're going to see the cycle again. I'm not sure. Had to buy GME call options. I would just get a lot of time because, like I said, I don't see the cycles happening. I think the market's at the beginning of a downturn. It could last for months and months. I mean, maybe even a year. This whole last year we've been uptrend. We might have a whole another year in a downtrend, back to October lows. And GME not going with that. We'll see. But yeah, if you're gonna get calls, yeah, just get a bunch of time. I wouldn't get over 30 bucks. Yep. IV's low enough though. I mean, you can get pretty good amount of time, pretty close to the money. I'd at least get January's. I don't think we're at the bottom. What GNS do? Back to VWAP, yeah. Almost 12% on barbecue. Unlimited data.
Seen it before. It's not really surprising that they're backing off. The question is, when are they at a safe level again, right? That's
Lucid
what everyone's
15
trying to figure
call.
out right now.
February 20.
Very well said. Exactly the three-year chart we're looking at for Apple, Microsoft. Same
I think
story with the others, right? You're
Lucid by
the chunk that
February
was beyond
2024
the high and
might be
remove that,
bankrupt.
Essentially.
I don't
One
think
more
they'll be good.
subject
I
before we
even
clock out
have
for the week, sir. What's the impact you think of?
Pause this. I have Lucid puts for January. Not as much time. I have $1 puts on Lucid. That's my sentiment towards this EV. Not looking at the chart, just everything else. Barbecue, like it to hold above there, would be great.
Now to what
Nice,
happens
Deke. Well done, man.
with the news out of China. Right?
I get back a
And
little
you
bit of my
can take
profits
a basket of stocks.
today
You mentioned
on
them, the
SPY.
casinos,
But small
even
losses.
Tesla,
I lost.
and all of those China-related names, whatever list you want to make, that's their own sector
maybe less than
right now,
5%
and
of my
they
profits
move
from yesterday.
together
So
with the news
not even close to
coming out of
5%
China.
actually.
So many of these companies
no, like
are
5%.
linked to the strength of the Chinese economy and the
trying
variable.
to-
You
small
can even
losses.
throw the grain markets in there
It's small.
in terms of a China variable. So yeah, a lot of these companies, they need China
Aiming
to
for
be
September.
strong and get stronger. And
Yeah, I mean,
they need
well, it's
all
definitely
these
rolling over.
stimulative
If it
work that the
bounces
Chinese
here and keep
government's
going up,
doing.
I don't know,
They
but,
need it to start hitting, and people are making bets that it's
it didn't
gonna
have to
hit,
make it all the way to
but
all-time
some
highs,
of the data
but it got
shows
really
up.
close.
You see, big day yesterday,
And that's plenty
disappointing
high.
price action today, Oliver.
Look at prior, like,
Okay. Thanks for the
I attribute this to
combo.
2001 to
Much
2008,
appreciated. Kevin Hanks,
just on the
nice
shorter
setup here
time
into
frame
the
because
last
everything
hour
moves
of trading.
faster.
Co-host the Fast Market.
Let's see. So this actually made a little higher high in 2007.
Together into a
But,
strategy, maybe one
you know,
in an ETF for the
flip it
team.
around
Vanek joins
and
us. David
doesn't quite
Schassler
make the
is
same
portfolio
high.
manager,
But I
head of
definitely think we've hit a
quantitative
top.
investment solutions at Vanek. Got a couple ETFs we'll talk about.
I mean, look at the
Dave,
weekly.
welcome
You've
to the
got
show.
engulfing red candle on the
on
weekly
the
even.
surface, as we head into the bell on
RSI
this Friday,
divergence is
kind of a
there.
sleepy session. One might be forgiven for thinking nothing
Where it finds
happened
support,
this
I don't
week,
know.
But it kind of did. All of a sudden, we're talking about a lot of the themes from
I could
last
definitely
year.
see
Is that
new
going to be a
lows, though.
problem?
New
We
October
think
lows.
second half of the year looks nothing like the first half. We just wrote a commentary about it. Bottom line, you were talking about it in the previous segment. Those top 5 growth stocks allocated,
You're doing
25%
zebras
of
on
the
the SPY?
S&P 500, up 100% on average the first part of the year.
Yeah,
with
zebras
super
are cool.
negative earnings yields.
Zebra.
In our mind, are an attractive place to be. We look right now at the market. We think we're in a disinflationary pocket in what will overall be a long period of inflation, right?
You could
we
be
don't
trading
think this time
futures,
is
Dave, if
different.
you're doing
You look at the
zebras.
market and you look at periods of historical inflation, and
It
you
moves
see
the same as a zebra.
pocket of inflation, pocket of disinflation,
Get more leverage,
pocket
though.
of inflation, pocket of disinflation, and then you see above average inflation for an extended period of time. We think that, again, unfortunately, this time looks like that. So investors really have to focus on the assets
Really
best
most of these
positioned
that
to
my
perform
friends
in that
want to
regime.
sell.
And really what we're talking about is assets with scarcity.
Yeah,
Right?
I
We're
sold
talking about
GME
commodities,
a bit ago.
natural resource equities.
Once those
We're
options
talking
got
about
so
gold
cheap,
bullion. So we put all that together in one,
we haven't
in
seen
one
cycles in so
ETF.
long.
Vanek Inflation Allocation
I
ETF,
have
ticker
no reason to hold anymore.
RAAX. That's exactly what it provides.
Okay.
So selling cover calls didn't make sense anymore.
Firstly, why racks? What does
Holding
that
shares
mean?
just
What
on a
is
roller
racks, David?
coaster.
I was thinking that was like
But,
a
like,
almost
not
like
like
a
a roller
cloud
coaster.
computing, like racks of servers.
Yeah, so we renamed
this
the
is
strategy.
interesting.
Originally, it was the real asset allocation ETF. So we renamed it the
Got
inflation
it.
allocation ETF just to really drive the point home of why exactly you'd want to own this. But let's simplify it
that's
down.
kinda cool.
What does the inflation allocation ETF do? What
Loss
does
over
RAX
keys to
do?
profits.
It solves for 3 problems.
Best
the
traders
first
are the
is,
best losers.
which assets do you own to protect against inflation? So that's what it does, right? Commodities, natural resource equities, gold bullion. That's effectively the core of it. Secondarily,
Yeah, do
how
paper
do you
trading for sure on
allocate?
it.
How do you allocate across
It's much
these
more
assets?
simple than options.
How much commodities
especially
do you own?
options
How
with
much
legs
natural
like
resource
zebras.
equities do you own, et cetera? And then lastly, how do you shift those allocations over time as the inflation regime evolves?
Your commissions are higher on futures.
Inflation isn't always going to be scorching hot, right? Inflation at 2%
But
is
you
a
can only-
different
you can,
problem
you know,
than inflation at 10%.
You can scale up
So
and do
what this
big
strategy
ES
does
futures,
is it
which
changes its
you only need one
allocation
of them.
over time
It's like
to
a
adapt
quarter
to the
million in
inflation regime.
leverage.
That's what this strategy is all about. So think about
So,
it as effectively a
you know,
one-stop solution for inflation
but you can do the
protection in
micro
your
ESs.
portfolio unfortunately, most of the people we speak with are significantly
GNS is coming down there.
underallocated to these assets of scarcity.
Excuse me.
That's what we're trying to do now. We're trying to promote these assets so people are well
BBBYQ
protected.
hitting that resistance
If,
button.
unfortunately, our view turns out to be the reality,
Friday to you too,
and
Zia.
inflation lingers a lot longer than people would have expected.
Okay. Now, is inflation lingering the same type of problem? By the way, the asset allocation, the double A's, okay, I like it. So
What's
is
top doing?
inflation lingering
Down
a
6.3.
similar type of outcome as inflation spiking?
Brad, little
Because
pop up with
last
some
year's
volume.
Spike, I mean,
Do it.
all these assets you're talking about would have done great. I mean, they did. That was the trade last year that you were elated to be in. But we have that type of same springiness in some of these if it's just inflation sticking around and maybe causing problems, but is it not a little bit of a different type of problem than like inflation shock?
No doubt that there was a hard inflation shock. We're not calling for that. What we are saying is that inflation's unlikely to fall to 2% and stabilize.
Cool.
So now think about, let's just
Cool,
focus
Daniel.
on commodities. Let's focus on the most important commodity, which
Yeah,
is
everything's
oil.
good.
There are structural supply-demand
Everything's
imbalances
good.
across the entire commodity spectrum. But again, let's just focus on oil. So right now we've got peak demand butting up against significant supply issues, and we've been betting that oil prices surge. That's what's happening right now. So that's benefited our strategy. Bottom line is, if you just get elevated levels of inflation without an inflation surge, elevated levels of inflation, you can see these assets do historically, and they've done it really well.
Kind of want to
when you
even
get
maybe
that
buy the dip
combination of
today on.
weak economic activity
Not
followed
getting
by
too quick,
structurally
though.
higher inflation. And then when
Uh,
you think about your asset allocation, you
wait.
think about your stocks, you think about your bonds, and then hopefully your real assets, which is where the strategy goes, that offers what you would think of as really the third leg of the proverbial stool, where you get that full dynamic asset allocation that could protect you in each of these economic regimes.
Okay. So now this is basically a full suite of exposures. Like if I think about from a portfolio allocation perspective, should this be essentially the entirety of kind of my strategy and approach? Because, I mean, there's certainly, it's a very unique type of construction for the fund. It's not like I'm swapping my bond position for this fund or my stock position for this fund. It kind of feels like it's holistic, almost everything.
It is designed to be your core solution for inflation protection. Now, when we've done the work, we've gone back and looked at periods of high inflation like the 1970s. And if you own less than 5% to these scarcity assets, I'd be very concerned, right? So for us, the number's around 10% in a diversified asset allocation to real assets. This strategy was built to encompass that entire allocation because it's diversified across commodities, natural resource equities, significant gold bullion allocation, and also high yielding real assets. We're talking about REITs, infrastructure, MLPs. So you're really getting all of those individual solutions in one ticker. That's RACS.
Okay. Now, what am I paying for it? Is it cheaper than hiring a financial advisor?
We're not substituting for a financial advisor. What we do is we allocating, it's actually a fund of ETFs. So when you allocate to the strategy, if it's a VanEck ETF, we're rebating the fees. So there's not a layering of fees when it relates to the VanEck ETFs. And we're trying to provide the most cost-effective solution. So, and we think we've done that.
Interesting. Okay. The difference between RACS and PIT, because that's another fund that's commodity focused, ticker PIT. This is more of a targeted commodity approach.
no way,
as
I'm not buying
opposed
back
to
into
sort of
GNS
like
today.
a broad inflation strategy. Am I reading that right?
I mean, it
That's
made a
exactly
nice
right.
move.
So
Hit
PIT is
two
very
resistance.
different in the sense of it's a pure play on commodities. We look at the commodity markets and we say to ourselves, that is a ripe asset class for active management. You've got a lot of differentiation. Commodities are zigging and zagging all different ways. You've got a lot of volatility, and you get these repeatable patterns in commodities. So
Come on,
what we
Rad.
did was
Do it.
we applied our investment approach to commodities. And what we're effectively doing is helping you decide which allocations, which commodities are the most attractive right now, and helping you weight those allocations over time so you get a nice diversified exposure over time. The strategy is relatively new, but it's performing very well. We were talking about oil before. Oil right now is the biggest.
Which one of you
active bet
let
in
me
the
buy
fund.
Joan
Right now,
calls
it's
yesterday?
almost 53, 54% of the entire allocation to the energy sector. So right now we've been pounding the tables
Joan?
on energy, saying
Really?
that we think energy is going to go higher. Obviously allocating that way, and it's been benefiting the strategy, and it's really differentiated
Sewing
itself
in
relative
fabrics?
to peers since it's launched. So we're happy with it. We really are.
Okay, very cool. Like that too, is there's not a lot of great encompassing commodity ETFs. I'm going to keep track of PIT. I use the GSG a lot, but it doesn't quite do the job entirely. So this is more kind of an investor, a trader's approach to think about the commodities. Also at a fresh high since the debut, right? Because you guys made this coming into this year, and just today we're getting a fresh new trading record. It looks like to me.
Yeah. That's exactly right. And just a mention on the ticker, PIT, what are we talking about? It is a throwback to the old commodity pits from back in the day. So that's where PIT came from. So PIT, it's performing really well. It is differentiating itself relative to BCOM and competitors. We've been allocating towards energy. So it's energy. We're bullish on energy. We've been bullish on sugar, underweight natural gas, less underweight natural gas than we were. But really effectively, that's how we've been positioned, overweight copper. So definitely more of a cyclical bent, definitely more of a what I would describe as more of a pro-inflation bent. And that's how we're positioned now. So we're looking forward to future performance. But it's gone well so far, off to a good start.
All right. David, really good conversation. Really enjoyed it. Very interesting approach. We'll certainly be watching the funds.
I've had a nice bounce today.
I like the tickers.
Off of that 50% retracement.
Right. A couple good inflation funds for us to watch.
This one might be a runner next
both
week.
Up on the year, a little tiny bit. Well, I guess I should check actually after today for the S&P, but we're roughly on par about with the stock market. So pretty good performance for a commodity approach, and then an all-weathered inflation approach. When we get back, let's talk about a different type of energy, carbon neutral for the next ETF, moving away from some of the old oil and gas. And a ticker that I think is fairly straightforward for the next one, as we'll be talking about AMPed, AMPD.
Yeah, barbecue's up 10%. Only another 1,000% to go. $100,000%. Okay. Yeah, I guess with my position size now, I would need more than 1,000% to get back my gains. My losses, rather. Hi, climbing. Bad, 10 1/4. Do it. I think when Dish has a breakout, it'd be good. What if I have SPX? Not exactly sure. 5435 next Friday. Oh, up, way up from here, huh? Sure. Feel like gap next Friday? Maybe. Be a pretty large bounce. Without any catalyst. I guess we have FOMC next week, huh? Alright. Yeah, Tuesday, retail sales, import price index, Wednesday, housing starts, FOMC, Thursday, initial jobless claims. Oh, maybe. This wild, you ever DJ and look through that? Yeah, I've looked through barbecues subreddit a lot less lately. Because it seems like a waste of time. But there might be some interesting stuff on there at times. I'm kind of just following the chart on it at this point. Yes, RAD. 10% on RAD. Beautiful bounce off that golden pocket. Really cool.
We'll say 3 to 4 years to get something new onto the U.S. grid and plugged in and delivering the electricity. Right now, that backlog is as much as,
I'm gonna see if anyone's intelligent something to
7
say.
years. And then you're also seeing
Yeah.
cost overruns
Yeah,
going on with this. So as of
I haven't
June
kept up the last
23, at
week,
least 40% of all offshore wind
but I
capacity
think it's
that has
been
been
good for
sold
me.
forward is now under dispute because it's costing more money
Keeps
to
me
build under
sane and
contracts.
more
Those
rational
contracts
on
are
what's going on
underwater.
with it.
And you're also seeing the cost of this offshore wind.
Watching
It's
the
about
chart.
60% higher
$10
than
a
people
day.
anticipated
Do it.
because of labor shortages, inflation, material costs, etc. So we think those things are delaying the supply, and we think that the demand is understated and that imbalance. This is the way you can choose to play that.
This group is cool. It goes to the sweet ride and the washy crash.
they show,
Yeah, it's
when we look into the fund,
low
just
and
to make sure I
dampened.
understand, when somebody goes to click on the fund and they see the holdings, they're going to see something that looks like a bunch of government bonds, basically, as the biggest part of the fund. But that's going to change based on kind of what exposure you want at any given time?
Well, what happens is when you
Yeah, that's
buy
good.
commodity futures on the
I could
exchange,
do that on
you don't need to
barbecue.
put
We've
up
got the
100%
18th,
notional,
the
so
next
you'll put
main
up a percentage of it. So right now it runs about 20%
deal
for
going
the
on.
margin, and then the other 80%
I guess I was
goes
following it
into
closer to
three-month
why I didn't
treasuries.
need to do this,
So
but
we are only investing in the underlying commodities, but the
that's
excess money
that's
just
next
goes
Friday.
into reliable U.S. collateral.
I see. And what do you anticipate as being kind of the most full the fund will be, or the most,
Fugazi rip.
I guess, levered to the core product that you want here with that carbon neutral approach? I mean, what's the lowest like treasury holding you might get?
So we don't over lever it. So if you have $100, we'll say, to normalize the math, right? And 20% of that, or $20, has to go to the futures, and the other 80 goes to collateral. We won't overclock it. We're not going to overbuy 3, 4, 5x of the underlying futures. We just match that exposure precisely so that you're getting exactly what you're looking for, and you're not over levered to it. So that way you get what you want, which is the U.S. electricity demand picture and a chance to express your view.
All right. Okay, Tim, thanks for the refresher. Appreciate it.
Thanks for your time. Appreciate it.
Absolutely. Tim Kramer, CEO at CNIC Funds. AMPD is the ticker. All right, definitely an ETF-heavy hour here. As we come back, let's talk artificial intelligence with the team at Robo Global. AI has had some trouble here since NVIDIA stopped rallying and Microsoft slowed down. But as you can see for the chart of Robo, just a little pullback in an uptrend. We'll talk about what comes next for the mega hype trade of the year, artificial intelligence.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Looking to improve your portfolio management skills? Our Portfolio Management webcast series breaks down key concepts like retirement planning, income generation, ETFs, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcasts and start learning today.
Thinkorswim by TD Ameritrade is more than a trading platform. It's an entire trading experience that pushes you to be even.
Yeah, we might get a sell-off into close. Big Friday dump. And dump on Monday then. I don't know. Market's been, I mean, it's been pulling back for, what is it, like 10 trading days, so we might be due for some bouncing next week. Let's see. No divergences here. Seems like it still wants to fill that gap, so maybe it fills that today and today. Before it starts heading back up. Got zone right here for a shoulder liquidity. Got a head here, so could be setting up something like that. Inverse head and shoulders to fill the top gap. Hey, Harsh. Hey, Harsh. Hey, Harsh. GNS. Oh, look, it didn't move. Oh. Oh, because I just have it to here. Yeah, GNS popped back up there a little bit. Ah, that makes sense. Yeah. Cool, now up there, it'll go up there, yeah. So that's kind of what you'd want to do right there. To see when it breaks that trend. Nice. GNS back to VWAP. I'm going to wait though. I'm going to try and be patient. It is getting a nice strong close though. Oh, and look at that. It literally retraced perfectly to 38.2. No way. Look at that. Did a perfect retrace. Ugh. Guess I could have bought some, but I'll stick with my plan. It literally bounced right on that 38.2. Wow. Wow, wow. Wow, 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 yippee-yo, yippee-yay. Hmm. Yeah, oh well. Gonna want to go to back to safety, back to VWAP for close, most likely anyways. Why do fibs work? I don't know. It's how the algos are programmed. Because people program the algos, and a lot of stuff in the universe works on fibs. I don't know. I'm starting to understand how to use this thing now. I think having the extended on helps me to visualize what's going on. Yeah, that's kind of cool. That's super cool, actually. I'll get used to how to work that thing. I see its usefulness though right here, and then on the uptrend, it's like it's a wider range. Could have even done it like with that candle. Why is it giving me a tighter range as I go up there? Huh. Should have looked for that. I feel like I would have pulled out sooner though. The break of that. Maybe because I'm too far down. What would give me more? Yeah, like why would... I guess that's more what I'm looking at. Yeah, you just have to adjust it for how you like, because that's where I would break into that channel is where I'd want to take profits. And then of course you could always add on the bottom of the channel, take profits on the top of it. That's gonna be pretty fun, I think. Barbecue back up there. Well done, Barbie. Jenai.
Last half hour, former FTX founder Sam Bankman-Fried loses bail after allegations of witness intimidation. A few other ways to frame this. Take us through it, Jenny.
Yeah, this is a really interesting story, Oliver, and we just are getting developments sort of as we speak. But Sam Bankman-Fried will head to jail Friday after a judge did side with federal prosecutors to then revoke his bail over alleged witness tampering, like you said. He will be held directly in custody now in New York, where he will remain ahead of his criminal trial, which is set to begin on October 2nd. So since his arrest back in December, he has been out on this $250 million bail at his parents' home in Palo Alto, California. But his court appearance on Friday is the latest series of these pretrial hearings related to his continued dealings with the press specifically, while exchanges which the Justice Department characterizes as a pattern of witness tampering and evading his bail conditions. Now, Judge Lewis Kaplan previously did issue a direct and stern warning to Bankman-Fried in July over his conversations with the media. Lawyers that represent him have argued that if he were jailed, he would not be able to properly prepare for his trial due to the amounts of discovery documents that are only accessible via computer through his internet access. So that has been their case. But in this motion requesting his detention, the government said that over the last several months, the defendant had sent over 100 emails to the media and made over 1,000 phone calls to members of the press. So he's been quite busy. They also said that the final straw was that he was leaking private diary entries of his ex-girlfriend to the New York Times. And we did see that she actually had previously pled guilty to these charges back in December of 2022. So we also have just seen the government that did add that Bankman-Fried had over 100 phone calls with authors of New York Times per a publication, many of which had lasted for over 20 minutes long. The prosecutors described the effort by Bankman-Fried, who faces several wires and securities charges related to his multi-billion-dollar FTX fraud, as really an attempt to discredit a lot of those that had been basically turned on him, and a means of indirect witness intimidation through the press. I mean, this is just, it feels like this will actually one day become a book and a movie. It feels like this is like not real life, but I mean, I think this seems, at least from what I'm reading so far, this seems like the right call. I mean, 1,000 phone calls, all these different reporters, and like, you were guilty. I mean, he is basically the head of this operation. So this is fascinating, but I mean, at this point, that bail was denied. So he will be sent to New York until October 2nd.
Wow. The former girlfriend whose pages of writing he was leaking, that would be Caroline Ellison, who pled guilty, the former CEO of Alameda. So that seems like pretty heavy, tampering, because there's a lot of, I mean, the speculation that she's going to be a very big witness in that. If indeed whatever he was doing, the judge has said qualifies as tampering. It's not like it's just his interview with, Vox.com or whatever. I mean, like, he's apparently giving out some pretty key information about
higher than the last 2 days.
Basically biggest player in this whole story. So, big deal. All right, thanks for the update. Let's see. Bitcoin's not doing anything. Okay, but glad we got a fun story on a Friday. Not fun if you're Sam Bankman-Fried. But all right, Phil Striebel joins us right on time, Chief Market Strategist at Blue Line Futures. And I would say, I think, fair characterization, a crypto cynic many times, but also a fair trader, as you've traded in both directions.
That's
Phil,
crazy.
BTC not moving on SBF going to jail. I guess we shouldn't really expect that.
It seems like everybody's going to jail today. There was the Hunter Biden, that new news. They said that Trump, he could still run for
I lost
president.
track of that one.
And they said that 4 out of 10 people from Iowa would still vote for Trump if he was in jail. And I looked it up in 1920, Eugene Debs, he ran for president. It was 4 times while in jail. He ran under the slogan, he's vote for President Convict 9653. He got 1 million votes, so that's not bad.
Nice. So what do you trade right now, Phil? Are you trading BTC, trading crypto? Does it care about anything that happens with FTX anymore?
Bitcoin's weight, it's essentially, I mean, it's not going away, but it's in this 4K trading range. It's been in the same range since July. It's a wait and see on whether or not they get this Bitcoin ETF. So any kind of dip is really going to be supported. I do think you'll get a squeeze higher in an initial reaction once you get the approval of that ETF, but it's just really
So
not
much
going
faster.
anywhere. And, you know, I mean, there's a lot of other
Looking
asset
for
classes
support.
that are weighing in it. Stronger
Here,
dollar
maybe.
index,
Next
higher
week.
interest rates. I think you're going to park your money.
Might lock that.
You know, it looks like you'd better get a better return on short-term treasuries than you would Bitcoin right now.
You know, it's interesting because I feel like you could argue it either way. You could go Bitcoin stuck at 30K. That's a bad thing because people expect to make money in Bitcoin. Eventually, they might lose their patience and sell. And also stocks got within 5% of their high, and Bitcoin was 50% below it. So the kind of negative framework is that it's lost the interest of the bull buyers and risk takers. On the other hand, some people might argue that BTC not doing anything is okay. I mean, where do you stand on that?
It does provide some stability. So, I mean, it's been such a volatile asset class. That's why I've always kind of shied away from it. You don't want to see, like, the dollar index can't move 10% in a day like how Bitcoin can. Bitcoin can move $2,000, $3,000, $4,000 in a day. And if you think it's a currency, that's not the definition of a currency, or at least any other established currency that we would trade. You know, the dollar index sitting at 1 month highs, gold at a 1 month low. You know, it's tough to find a place to park your money right now. The Australian dollar, the Canadian dollar, the yen, they all look very terrible. The Swiss franc, the euro, and the pound, they'll look like they're all barely just kind of holding on right now. So it is kind of a tough trade in the currency world. I think the only real action or actionable commodity right now is crude oil. You also got gasoline jumping up, having one of its best performances on the month here. It's up like 18 cents a gallon on the RBOB gasoline. But look at crude oil, just it's anchored pretty firm. I think 80 is your new support level.
Okay. So the momentum and the dip buying has been more in kind of the inflation-linked assets like WTI. So then I suppose as far as the macro trade goes, you're more watching the dollar and those commodities as opposed to any real kind of insight from the higher risk, crazier stuff. Bitcoin lost its macro connections a bit.
Yeah, there's nothing really standing out there. Like I said, energy is going to be your best asset class right now. And if you start to get inflation starting to pick back up, that's where you want to have that exposure at. You know, when you look at things like when you mentioned momentum, things like the NASDAQ and everything, well, the NASDAQ was up 36% for the first half of the year. I don't think it can match those kind of gains in the back half. And you're already seeing peaking in NVIDIA and Apple and things like that. So, you know, we might see equities come down a bit. You might see inflation pick up, and you might have a small stagflation play. There will be some calls for the Fed to, you know, cut rates and stuff, but they can't. As long as they achieve their soft landing goal, they probably won't cut rates.
Okay. Thanks for the convo, Phil. Have a good weekend, sir. Appreciate always a little trading chat here on a Friday. Phil Strebel from Blue Line Futures. Coming up, we've got Kathy Jones and Mike Townsend from Schwab to take us to the bell. We'll talk bonds, and we're also going to talk a little bit of policy. Actually, we only got 7.5 minutes here until the bell rings, so let's get straight into it. Kathy Jones, Mike Townsend joining me. Mike's Vice President of Legislative and Regulatory Affairs. Kathy's the Chief Fixed Income Strategist. All right, 2 days of inflation. Kathy, what did we learn?
I don't think we learned a whole lot that's new. So the CPI number came in a little bit shy of expectations. The PPI came in a little bit above expectations. I rarely have seen the market react to a PPI number that was largely in line with expectations. I mean, 2.7% year over year, not exactly alarming. But I don't think the inflation data taught us anything we didn't already know. That inflation's coming down gradually, slowly, but it's not quite
too soon to tell, human, but we could be.
Okay.
I bought shares this morning. And kind of broke this resistance.
Means that we need some.
I wasn't necessarily expecting us to rip another 6% today, but
you expect into Jackson Hole? You think he's gonna?
Yeah, it's one step closer to a bottom forming.
I kind of doubt it, although he does have a couple of speaking engagements.
Horizontal
we'll get some
channel
minutes of the last Fed meeting.
potential
It should be interesting.
turning into this full
I think
cup.
that
So we've got downtrend
based on the
slowly
last set of numbers we had in the last
decreasing
meeting,
in its trajectory.
the
It was
Fed's
steeper
kind
here,
of taking a victory
got
lap
less steep here,
You know, we've got
and then it kind of
unemployment
picked back
holding
up its steepness right
steady,
here.
but wage
Now we've
growth
broken
is
that.
slowing down a little bit.
This
You've
less
got
steep
economic
trajectory
growth
here is what we're
chugging
looking to
along,
break right
and
here
you've got inflation coming down.
and
And
hold
when
above.
you look at the
And then
key
if
number
you see that and you start
the
trading this
Fed
area,
has been
then you
looking
just
at,
naturally
that
have an
super
inverse
core
head and
number
shoulders
that
too.
excludes the
Inverse head
housing,
and
because we know
shoulders and breaking
rents
that
are
resistance.
coming down in real life. They're not
All
coming
good
down in the
things.
index. That's almost at their
Circular
target.
motion.
That's roughly at about
It doesn't look like this
2.4%.
will
So I
do
think he's
anything
got to express
40
a certain
cents
amount
before
of
this catalyst, though.
satisfaction with where we're going.
That'd be a pretty
although
big rip.
leave the door open to more action.
So far,
if
they've
needed.
been the cups on barbecue have been. Well, that's not actually true. I guess this one was pretty steep. So this could be next week.
The White House
Is this cup like the SPY drop in there? 10 minutes Fugazi, 5-minute finger slap. See, this cup was pretty gradual and then it ripped, so we could see something like this next week, I suppose.
It's been a while, right, since we had one of those?
But see, this cup was much more
While,
symmetrical.
but I think the president is.
For this one,
we're hearing all about Biden.
Maybe it'll rip.
Now. He's going around the country and he's
But
talking
if it's
about
more symmetrical, you're
what's
looking at,
happening in the economy. He's trying to make this
after this
case
meeting,
as you
whatever
head
this
into
is,
the fall and into
looking into
the
September.
presidential election year. That inflation is way down from where it was.
I've down to 75 cents. Nice.
And et cetera, et cetera.
Yeah, I
think that's what
closed
we're gonna
out,
continue to
so
see
I
that
just
rhetoric
bought
from the
back
White
in.
House, over the next
Very, very small
3 to
amount
6
today.
months as he
I'm trading with a
starts to
lot
ramp
less
up
on
into campaign
barbecue
mode.
now than I was. I just think it's way
what
more
do you think
risky.
is going to be sort of the pressure then to make
So,
sure everything fits
all you guys become
their message
billionaires,
by the
I'll just be a
time we go to
multimillionaire, I guess.
polls? Because I'm guessing if part of the Bidenomics thing is taming inflation, which correct me if I'm wrong, I think he's
That's
talked
kind of a
a little
joke,
bit
so.
about that. It's coming down obviously
Some
from the
manifest
highs.
news.
It's going to be a problem to pitch that story
Dang,
for back
Bubba.
to 5% CPI in a year.
Yeah, no, I think that's absolutely true. That is going to be tough. But I think what they
PT
want
reset.
to do at the White
Dang.
House is
Don't
is
you only have
make
like
the
one of
case
those?
that some of these decisions that they in Congress have made over the last
Yeah,
year,
50% on a small
whether it's
account.
the infrastructure bill and getting
I
that
did,
money out
let's see,
into
I did
visible
850, that's
projects that
crazy.
people can see, and helping voters make
Did
that
like-
connection to from policy to actual
is that?
results. And so certainly
Did
the
almost
inflation
100% in
story,
2
plays
days.
into that. The White House is going to be
No.
hoping that number keeps coming down and down.
Yeah, so I had
that,
losses
the Fed
3
will
days
stop
this
raising
week,
rates and that they can
but
make the
still
case that
did
look how much of a difference a year is
50%
made, and therefore that's the
on
reason
the overall
to
count.
keep this
800% on
administration
count, that's crazy.
in office as you head into the election next year.
I'm happy if I'm
Okay.
losing more than I'm
The
winning,
data
but my
that,
P&L is
now
going up.
Sits between here
I
and
don't,
Jackson Hole. Kathy, what do you think we
I don't know if I
learned
can
as
do,
far as the employment data the
win more
last
than I
couple
lose, so.
weeks? Some of the strikes and unionization
Small wins, big
happening.
losses,
I mean,
or
are there
small
wild
wins.
cards
No, don't say
here
it. No, no, no.
potentially about
I take it back.
What inflationary forces could
Big
arise
wins,
this
small
month?
losses.
It seems doubtful. So the first thing from the strikes is it's going to probably send
If you're doing
dollar
options,
up. And so
we just go to a
that's
cash
gonna
count
actually look
to get
like
to
a
25K.
signal that the,
And even then,
the
I'd probably
job
stay in a
market
cash
is
count, maybe.
softening. It depends on how
On your
things
small
are
account.
resolved in terms
That's what
of wages.
really
but
helped me
remember,
out.
union membership is
Once
really,
my account dropped below
really
25.
small fraction of the labor market.
Now that I'm
So even,
doing a lot more
we're
just
hearing about
day trading on
UPS
SPY.
drivers making $170,000 a year.
'Cause it
5
settles
years
next
from
day.
now. That includes benefits,
So
a lot of other
I use
things.
up
If-
pretty much
if
all my
that
buying power every day.
happens, that's
And then
still
it's
a
all
pretty small fraction of the labor force.
it's all settled
So I
next
don't
day
think
to
that's
reuse
gonna be a
again.
major
And that's
driver
actually kind of a nice
inflation.
little
It may cause people to worry about inflation.
it's a nice little
but we're not back in the 60s
like,
when the majority of
just
workers
spray
were
something?
in unions.
Spray a little
that
axe on or
had
something?
Wages indexed to CPI.
It's a nice
just not happening.
boundary
Got it. Okay. Good point
to keep me from
on what might
over
happen for
trading,
jobs
revenge trading.
during the short term. Definitely something to think about. Mike, as
You know
far
what I
as
mean?
wild
Because if I
cards go,
this count what has
here we go.
3,500 now.
September, so what? We actually got to worry about a
So
government
by the time
shutdown
at the end of the
again. Looking at
day,
your notes here, it says that
show you.
chances prices are high. The
Oh, you
fight
can't really see it.
continues. Do these people ever stop?
By the time at the end of the day, I'm out of buying power.
Come on.
So I can't overtrade.
No, the fight goes on, and this is really
Why does it
just,
always do
just
that?
a moving of the ball from the debt ceiling fight that we had
Why does it get rid of
a
it?
few months
Tell
ago.
me.
And as we head into September, they've got a deadline at the end of the month.
So-
That's when the government's fiscal year starts.
But then on Monday, I'll have all that purchasing power back, and I'll be able to
chance that we have a government
enter
shutdown.
trades and exit.
There's a
and-
possibility that it won't be on October 1st, that they'll
I don't
kick
know.
it down the road.
I did break the
for,
rule
for
today
a
though,
few
because I used
weeks
my other
to continue
account.
to negotiate.
for
The
that
thing I
long.
hear, Oliver, is that the two parties are starting from
Thankfully, I
completely different
took a very
places.
small loss on it.
The Senate, which is
but I
run
don't
by
want to break that rule
Democrats,
again.
is using the debt
I want
ceiling
to stick to it. I think
agreement.
it's a
This
good,
is what was
good one.
agreed to by the president and the Speaker of the House to keep spending basically
Final
frozen at current
few seconds
levels.
of the week.
But Republicans
Thank you
in the
guys for your
House
support
were-
this week. Did you pick it up on the likes? 30. I mean, it's kind of sucky, but whatever. It is Friday, I guess. You guys are just playing hooky. Thank you for the support. Hope you guys did well. I'll probably do a Theta Farm update. I'm thinking I'll do it like twice a month. I'll do it, or maybe 3 times a month. Like beginning of the month to show what we did on the last month, and then maybe like a recap mid-month, or maybe like an OPEX, and then one more at the end of the month. So Theta Farm is still growing. It's slowed down a little bit the last few days just because I'm trying to reduce a lot of exposure. Market's getting a little shaky. Some stuff's not working out too great, so slowed down some, but I think we'll still be green by the end of the month. I'll recap on that and might start doing a small account series. So we'll just have to dedicate some time end of day to have a recap video, kind of how I used to do recap video, but I would do it just on my SPY trades for that day, my entries, my exits, why I did it. Probably be good for me also, just to review it myself and to hold me accountable and to have kind of a record of to try and improve. So might start doing that. I don't know, what do you guys think about something like that? Figure that would be pretty well received. Small account challenge, as well as it's kind of doing two things. It's a small account challenge as well as just learning to day trade SPY and trying to improve. So, how much does small account start at? Small account start at big account. Let me see if I can show you. And why any sort of wisdom you get from me is not me frivolously saying it, because I've been through it. Yeah, I think I can, yeah. Let me show you this. I've shown this before. I've shown my tax returns before. You guys maybe haven't all seen them. There you go. Small account. This is my small account challenge. However, I'm starting over, right, with a small account. So yeah, currently it's at 3,500, but you can do it literally with 50 bucks. That's all it really takes to buy. You know, all I really need to start with options on SPY on daily. Just can't have any losses. Need to build up a little cushion. So yeah, small account, maybe a big account. Once more. Hope you guys have a good weekend. Practice good risk management. First thing you should learn, if you haven't learned it, is risk management. Serve you better than any TA. You can literally just throw a dart and have good risk management and make money in the market. Like, doesn't matter if you go long or short. Go long, go short. 3 to 1, 2 to 1, risk reward. Be robotic, stick to it. You'll win. It's like a barbecue chart. It's no, I didn't have much barbecue in there. That account actually didn't have much barbecue at all. It does kind of though. Been on a downtrend. It peaked. Let's see, it peaked at 61K. It was a year ago. I mean, a whole year of being an idiot. That's just on this account. See my other 3. Whole year of being an idiot. Really, like 3 years of being an idiot. Anyways, yeah, here we are, August 11th, 2023. Thank you guys. Thanks for the support. Fun looking balance. Yeah, probably. Funny, movable small count to trading is 39.47 after today. Plus 107, 4% on the day. Nice. I am down 1.7% on the day. Yesterday I was up 30%, and the day before I was up like 20 something. So on the week I'm still up around 50%. So I'm stoked. I do have to say I think it's been pretty straightforward trading the last few days. Those 2 good days I had, I think were, I don't want to say easy, because you know nothing's easy in the market. It's going to try and take everything from you, but pretty clean setups. Whereas today actually I was doing well in the morning and then over traded through this mess. We'll see. I'm trying to have small losses, so I'm glad today was a loss, and I'm glad it was small. Been through the record. I mean, that's how you learn. It's like, it's crazy. Always remember hearing people, oh yeah, you're gonna blow up your account, blow up your account. I'm like, I never blew up my account. Just slowly melted away. And then I'm like, wait, I just blew up my account. But I was doing it with 4 accounts simultaneously. So yeah, yikes. Keep the idiot to a minimum for sure. Opportunity cost working on Wendy's. Yep. That's funny. Yeah, now I want to do it. I know I have to do it for a living. So, the last 3 years I didn't really have to. That's kind of messed up. My own fault, but we could be making 725 together. But no, yeah, what I was saying is like, you can't, you have to pull up your account. That's what they all say. I'm like, oh, I haven't, I won't. Yeah, I did. 3 of them, 4 of them. And I don't know if there's, I really don't know if there's another way to learn in the market. Like you can learn and learn and learn, but until you've had those emotions, felt that pain, and just came to the realization, without that, I just don't know if you could actually change the bad habits and the just emotional struggle it is to do the right thing in the market without having to go through that pain. I just don't know if there's a way to do that. So maybe some of you guys have, and it's not going to happen in 6 months. I mean, after years, like, oh yeah, I'm 6 months, I'm good. Like, give it a few years. Anyways, yeah, paper trading. I know. I did paper traded for the first like 6 months or so. But I didn't take it serious enough, probably. Yeah, didn't take it serious. I still paper trade at times, like learning new stuff. It's like, yeah, paper trade is good though. That's why I definitely recommend paper trading. I definitely wish I just started with paper trading. I mean, if I just put all my money, even into the spot, even though it's come down, I would be up so much more right now. Insane. Insane. Make plans, stick to it. Yeah. Fancy Weeble fun time. Thanks guys, thanks so much for the support. Have a good weekend, be with your family. Yeah, run around. Don't get too hot out there. Sub up, like up, comment down. Happy money sticks around. We'll see you guys on Discord or Twitter. And that's it. Later.